which means we pray to you, O light, the giver of prosperity, joy and good health, and the destroyer of an inimical mind. Can we have a big round of applause, ladies and gentlemen, for the esteemed dignitaries, for the auspicious lighting of the lamp. Thank you, honorable dignitaries. Let's have a big round of applause, ladies and gentlemen, and thank you, Honorable Minister, and thank you to the esteemed dignitaries gracing the dais. And with that, ladies and gentlemen, we would now actually like to invite forward a few microfinance borrowers based in the outskirts of Delhi who are going to be greeting the Honorable Finance Minister. I'd like to request Srimati Manisha ji to kindly step forward. She's from Meerut, Uttar Pradesh, and assisted by Fusion Microfinance. She's engaged in sculpting work. She's a sculptor, and she's going to felicitate the presence of our Honorable Chief Guest, Union Finance Minister, Srimati Nirmala Sitharaman, with a small token. बहुत बहुत धन्यवाद आपका मनीषा जी. इसी के साथ मैं बुलाना चाहूँगी मिस प्रवीण को सहारनपुर डिस्ट्रिक्ट से फ्रॉम नम्रा माइक्रोफाइनेंस द्वारा असिस्ट किया गया. एम्ब्रॉयडरी आइटम्स ये बनाती हैं मिस प्रवीण. जोरदार तालियां मिस प्रवीण के लिए. हमारे साथ हैं, थैंक यू सो मच, थैंक यू, श्रीमती सोनी जो कांगड़ा से आती हैं और सत्य माइक्रो कैपिटल उन्हें असिस्ट कर रहे हैं. शी मेक्स वुडन हैंडीक्राफ्ट्स और वो वुडन हैंडीक्राफ्ट का एक नमूना प्रेजेंट कर रहे हैं मैम को. शी इज प्रेजेंटिंग टू हिज एक्सीलेंसी ब्रिटिश हाई कमिश्नर टू इंडिया श्री एलेक्स एलिस ऑन रिक्वेस्ट ऑफ द ऑनरेबल यूनियन फाइनेंस मिनिस्टर. एंड आई एम गोइंग टू रिक्वेस्ट श्रीमती चमन फ्रॉम मेरठ assisted by स्वतंत्र माइक्रोफाइनेंस, एंड शी डज ब्यूटिफुल जरी वर्क जो वो प्रेजेंट करना चाहेंगी मैडम को. एक बार जोरदार तालियां लेडीज सज्जन. बहुत बहुत धन्यवाद आपका चमन जी. I'd like to invite श्रीमती अर्चना फ्रॉम हापुड़ डिस्ट्रिक्ट जो कि सैटिन क्रेडिट केयर द्वारा असिस्ट की जा रही हैं और बैम्बू प्रोडक्ट्स बनाती हैं मैडम. And I'd like to invite Kavita Devi ji. Kavita Devi ji जो झज्जर हरियाणा से light microfinance और jute items. She has jute items that she'd like to present to ma'am. Let's have a big round of applause. Thank you to our wonderful ladies, the microfinance beneficiaries who stepped forward and felicitated the presence of our honorable chief guest here. Ladies and gentlemen, moving ahead, I would now like to invite on stage, to the podium in fact, Shri S. Raman, Chairman and Managing Director SIDBI, to deliver the welcome address to our honorable guests and dignitaries. Ladies and gentlemen, please help me welcome Shri S. Raman.
Respected Honorable Union Finance Minister, Srimati Nirmala Sitharaman ji, His Excellency Mr. Alex Ellis, the High Commissioner of the UK to India, Shri Rajesh Agarwal, Secretary to the Government, Ministry of Skill Development and Entrepreneurship, Mr. Shri Sanjay Malhotra, Secretary to the Government, Department of Financial Services, CEOs of the MFIs, esteemed panelists and delegates. A very warm welcome to all of you. SIDBI has been a pioneer in nurturing the MFI sector with lines of credit, equity and non-credit initiatives. These continue till date. This is reflected in the fact that in 2015, when RBI gave small finance bank licenses, out of the 10 applicants that were given, out of the 10 licenses that were awarded, 9 were existing partners of SIDBI. The MFI sector has about 4 crore beneficiaries and therefore touches the lives of about 25 crore people. Perhaps the biggest tail risk event in a long time. But as is the wont, how we respond in the crisis matters. We cannot direct the wind, but we can adjust the sails, as the saying goes. The policy initiative of the government to introduce credit guarantee for MFIs was a boost to the beleaguered industry. New investment modes approved by RBI, like purchase of debt instruments of smaller MFIs through contributions channeled to AIFs, will fuel growth in the capital structure of MFIs. And these are on the anvil and will expand the scope and engagement of SIDBI with the sector. SIDBI has created an end-to-end paperless journey for its own borrowers, and this is being offered to all the MFIs such that their own costs of operations may be reduced. Digital tools that form part of the Government of India stack have become the bedrock of lending, and it's an imperative for the smaller MFIs to adopt this and move to even a phygital mode. Digital footprints have increasingly become a tool for risk mitigation, as well as enlarging the outreach to underbanked and underserved geographies in the country. It is the social behavior of a borrower that also requires to be captured to better assess the credit worthiness of an individual, whilst the digital footprint will form the core matrix for credit assessment. Development of the account aggregators is an important addition to the toolkit for seamless credit assessment and risk mitigation. Taking cognizance of the emerging digital innovations, SIDBI will be inviting startups to compete under the Swavalamban Challenge Fund that would be launched by the Honorable FM today. The benefits would accrue to the MFI industry. It is considered a matter of duty for SIDBI to host this event, and we look forward to hearing the views of the MFI industry that has faced uncertainties in the last 2 years on account of the pandemic. We have 3 panel discussions with eminent experts and MFI practitioners. I wholeheartedly welcome them. It is pertinent to note that the contours and characteristics of the microfinance movement in the country are in the throes of change. The group lending characteristics have matured over the years with a surge of demand for micro-enterprise loans. Urban microfinance programs are expanding with small business opportunities growing in megacities. So the way forward, it appears, is a focus on individual lending. The Congress will deliberate upon these aspects alongside the revised regulatory framework which RBI has put up by way of a consultative document. RBI also introduced a Financial Inclusion Index, which measures the progress in terms of access, usage, and quality of credit. The annual Inclusion Index for the period ended March 2021 stands at 53.9. Therefore, it appears we still have a long way to go. Simultaneously, SIDBI intends to institute a Financial Inclusion Award, which will complement the efforts of the RBI. The awards will be given annually to individuals or institutions or stakeholders who have contributed significantly to the acceleration of financial inclusion in the country. The first of such awards would be announced later today. I once again welcome the Honorable Finance Minister and thank her for the early acceptance of the invite and finding time to be here today that demonstrates her commitment to the sector. Thank you very much.
Thank you very much, Sri Raman, for that warm and courteous welcome note and also for setting the context for this event. Next, ladies and gentlemen, I would like to invite on stage Honorable Shri Rajesh Agarwal, IAS, Secretary, Ministry of Skill Development and Entrepreneurship, Government of India, to give a special address on the occasion of the 3rd National Microfinance Congress of SIDBI. Please help me welcome Shri Rajesh Agarwal ji, ladies and gentlemen. A big round of applause, please.
Honorable FM, His Excellency British High Commissioner and friends. I am very happy to be here and seeing many old faces. Some I cannot recognize due to mask, but I am sure I have a lot of friends in this audience. Ma'am, I was Joint Secretary in 15-16 in DFS. I was Jan Dhan Mission Director. And during that time, Social Security Net like Suraksha Bima, these schemes were launched. And Mudra was also launched with the tagline, Punji Safalta Ki Kunji. That is very important tagline, and where all of you can make a huge difference. Now I am in skill development and entrepreneurship. So job creation is very important. And who is going to create jobs? Medium, small, and micro enterprises. They are going to be our job creators. The bigger factories, bigger businesses, Industry 4.0, automation is coming. The jobs per capita GDP are going to reduce in the bigger sector. So it is a smaller sector which will be the growth engine for the jobs. And jaise bola punji se falta ki kunji, so you guys are going to be playing a very important role there. In entrepreneurship, the question comes, are entrepreneurships born? Is it innate capability or can they be trained? The new education policy lays emphasis on creating job givers, not only job seekers. So right from 9th to 12th standard, CBSE is creating a syllabus of entrepreneurship. In all our skill programs, whether it is ITI or PMKVY, etc., employability skills component is now inbuilt. As we have seen many good examples of vocational institutes like Indo-Swiss Institute in Mohali. आप किसी से बच्चे से पूछो कि क्या बनना है बेटा बड़े होके. He says in 5 years, I will have a factory of 10 crore turnover or 100 crore turnover. And if you see the alumni of that institute, it is not hyperbole. This is actually true. The students of that vocational school, all of them become entrepreneurs in 5 to 10 years. So entrepreneurship can be taught. And sometimes we have seen that majboori aapko entrepreneur bana deti hai. So 2 months back, with East Delhi Municipal Corporation, we launched a street vendors program. That जो अभी रेडी चलाते हैं, उसके जगह उनको इलेक्ट्रिक बैटरी वाला कार्ट मिलेगा, ई-कार्ट मिलेगा, beautifully designed, costing 2 to 3 lakh rupees. So MFIs become very important there. And they will give jobs to 2-3 people. So one boy came on stage. He said 3 months back or 6 months back, I was software engineer in Hyderabad. I lost my job due to COVID. Came to Delhi, started on a bicycle selling momos. But he said कि sir 6 महीने में, on stage he said कि 6 महीने में मैं 50,000 कमाने लग गया हूँ. अब e-card से मैं 3 महीने बाद 3 और लोगों को नौकरी दूंगा. And I will not go back to being a software engineer. So entrepreneurs can be created like this also. And role of microfinance is very important. And below that level also, in Jan Shikshan Sansthans, in urban slums, fringe areas, we give training to 40-year-old females, 50-year-old females, who basically after a break in life, the kids are grown up, they want to do something. So training makes them fit for 4,000 rupees, 5,000 rupees job. But a bit of microfinance, 20,000 rupees, can scale up their thing and वो आसपास की 2-3 महिलाओं को और नौकरी दे सकती हैं. We saw 5 ladies coming up here with different kind of products. So that becomes very important. Bank loans and philanthropic loans are available to higher education. If a student goes to IIT or IIM, banks are ready to give scholarships. But in skill sector, it is true that a lot of programs are free, government-based or state government-based. But there are many fee paid programs. For example, if a girl wants to do a 20,000 rupees L'Oreal course, or someone wants to do a 15,000 rupees Google course online, or someone wants to migrate to Japan and wants to learn Japanese at a cost of 2 lakh rupees, the loans are not available. So my request to this group is that basically NSDC is also talking to SIDBI and MFIs that we can provide you that comfort level. We can share data of aggregated data that these sectors are very beautiful. जिस बच्चे ने ये skill कर लिया या तो पक्का से अच्छी नौकरी करेगा या entrepreneur बनेगा. So you won't have NPAs. So we want to shake hands with all of you on that side. Now in e-commerce we see BNPL, buy now, pay later. So banks and all of you guys are willing to give EMIs to all those customers. So we should have a similar thing coming here. EMIs for doing skill courses, doing entrepreneurship courses, or expanding into entrepreneurship after this. Ma'am, we are very grateful to you that in your budget, you made announcement of Desh Stack. So what is Desh? 3 layers of trust, which is skill or experience certifications, payments, and discovery. So let us shake hands on these 3 layers. So we give you comfort level that these sectors are there. So trust credential parts. Then discovery we should make easy. These kids, they want loans. You want reliable customers. So that is discovery layer. And payment layer is where the money flows hands. So thank you, ma'am, once again for this announcement in budget. And again with that request that please treat skill loans, entrepreneurship courses loans at the same sort of respect as we give to IIT and IIM students, that everyone is willing to give them loans. You will find lesser number of NPAs here. These are trustworthy people and from poor backgrounds, and they can't think of not repaying the loans. So with this request, मैं यहीं पे ख़त्म करता हूँ. Thank you so much.
Thank you very much indeed, sir, for your thought-provoking inputs and insights. And now, ladies and gentlemen, let me invite on stage Shri Sanjay Malhotra, Secretary, Department of Financial Services, Ministry of Finance, Government of India, to extend a special address to the dignitaries present here today. Please help me welcome Shri Sanjay Malhotra ji.
Thank you. Honorable Finance Minister, Mrs. Nirmala Sitharaman ji, His Excellency the British High Commissioner Mr. Alex, my colleague from the Ministry of Skill Development and Entrepreneurship, Mr. Rajesh Agrawal, MD SIDBI, all the participants of the microfinance world, ladies and gentlemen. A very first of all, good afternoon to all of you. I'm indeed very happy to be here, and I'm reminded of what the guru or the father of this microfinance world, Muhammad Yunus, said. When I saw these ladies coming in and the happiness on their faces, making money really gives you happiness. This is what he said. And I quote him, that making money gives a lot of happiness, it gives a lot of incentive, but making people happy gives you super happiness. And I'm sure, and so I was in fact, very delighted when I saw the happiness on the faces of these ladies who have started making and earning a living for their own selves and for their households. Well, we all in our service, in the IAS have had some experience of micro enterprise and microfinance, and so my experience also goes back to 1996 when we were in the districts and we started this micro enterprise, microfinance movement. It was mostly at that time, through the self-help groups, and I think it was Bank of Baroda, which was the PNB, which was the lead bank over there, and we did a lot of self-help groups over there, and we sat on sat with the ladies, doing their, and asking them, exhorting them to do the Pancha Sutra, I think, yeah, Pancha Sutra, the 5 cardinal principles that are there. And now, making this journey and coming here and interacting with these ladies, it's like a full cycle. And I'm really very happy to note the papers that they shared with me, that this movement has really made a long journey and is touching the lives of, I am told, 10 crore people through this movement, and another 66 lakh 66 lakh self-help groups. So that will mean another 6.56 to 7 crore people, which makes it a total of 17 crore people through the SIDBI movement, plus the micro enterprise movement, with a total loan outstanding of almost about 4 lakh crore rupees, which is not a small amount, and which really shows to us that indeed, small can be big, small is beautiful. But as I say this, we realize that we have covered a lot of journey, we have come a long way, but there is still a long way to go. There is a lot of work to be done. The Government of India, through our department and the other departments, is laying emphasis. You are aware of, the schemes that we are funding, whether it is the Jan Dhan Yojana, which kind of becomes the base, for the micro enterprises to enter in and take the loans. The Mudra Yojana, the subsidy that for the Shishu portion of the Mudra Yojana, the 2% subsidy on timely repayment. My colleague mentioned about the PM Swanidhi Yojana for the urban street dwellers. So these are all the various initiatives that the Government of India is taking. I exhort all of you to take benefit, to use these schemes and provide the benefits to all the beneficiaries, to all the people. We have covered 16 crore, but still, as I said, I think we have only touched perhaps the tip of the iceberg. So, and in this context, the technology becomes a great enabler for us. I mean, the democratizing thing of technology is that it will take it everywhere. We have seen, many revolutions, and I believe now the next revolution is really going to be credit on the credit side, and that I say because of the flow of information, related to the credit history. It's only, because of lack of knowledge, lack of information, perhaps that you and we and in the banks, we are a little wary of lending, and once this information becomes available, I'm sure, lending is going to grow exponentially. We know that the repayment rates in the microfinance is much high, more than 99%. Again, it's because of the joint liability groups, the self-help groups, the pressures, the peer pressure that brings in the information. And again, that is because of the information that they have about peers and the pressures that they put. And that information, I think, technology is going to bring in. The Department of Financial Services, on its part, is working in this direction. We are preparing a portal in which we are onboarding to start with 15 credit-linked schemes of Government of India. But I think this can be expanded to all the schemes, and even the non-schemes, it can be expanded to even, your micro enterprises and beyond credit to other parts of the financial inclusion, which is the micro insurance schemes and the pension schemes. Well, I leave it at that. I think again, this conference is timely because the RBI, as you are aware, has come out with a consultative paper, I'm sure, and it has tried to, it proposes to change the way, business has been done in the microfinance enterprises section of the business, and so you are going to deliberate on those issues as well, and come up with some useful insights and issues. I look forward to the various recommendations that this conference comes up with. I wish the conference a huge success. Thank you.
Thank you very much, sir, for those wonderful words. And now, ladies and gentlemen, I must invite to the podium His Excellency British High Commissioner to India, Mr. Alex Ellis, to share his special address with all of us here. Please help me welcome His Excellency Mr. Alex Ellis.
Thank you very much indeed. Good afternoon to you all. Honourable Minister, Honourable Secretaries, sir, it is a great pleasure to speak. This is a sad day for me, for the continent I come from, where we are having a land war for the first time, something we thought we had ended in Europe, and I fear that is an issue for all democracies around the world to see such violation of the basic principles of the UN Charter. But this is a better occasion than that, you might be asking, why is the British High Commissioner speaking at this event? This is a perfectly reasonable question, and I hope over the course of the next few minutes to give you a good answer to that question. It must be a very exciting time for the people in this room. It must be a very exciting time to be the Finance Minister of India, because this is the country which has this wonderful opportunity of the next 25 years in terms of the next stage of India's transformation, with a demographic opportunity and the possibility of really, really turning the economy into something very large indeed. And I guess to do that, one of the things which will have to happen is the continued, I would guess accelerated, inclusion of more people into the formal economy. And that is fundamental to achieving the ambitions which India has set itself. Now, that's great news for India. That's also great news for the United Kingdom. It is entirely in the United Kingdom's interest that a fellow dynamic democracy like India should grow and thrive over the next 25 years. That's why our two Prime Ministers agreed a strategic partnership, the first European country to do so, back in May last year, even in the middle of a terrible second wave of the pandemic. And why I am here today, because we are one of the partners in helping that transformation to take place, including through microfinance. So we have done that in different ways, but the main way in which we've done it in the last few years is through funds, through investment funds to achieve social impact, and through technical assistance, particularly in some of the poorest states of India, to ensure that that transformation and that inclusion begins to take place, or it takes place. And I want to say thank you very much indeed for our partnership with SIDBI to achieve that end. The good news is the work we've done, the evidence is that this is working. It's working because we are reducing poverty through those investments and that technical assistance. It's working because we are including more people, and in particular bringing more women into the formal economy. You'll excuse the observation that I think the gender ratio in this room is very heavily weighted towards my gender. But the good news is that I don't know whether it's the median or the mean, the most important person in the room is a woman. And I can't help also noticing that the people who are receiving and celebrating and benefiting from this work are women as well. And I think bringing more women into this world, I think, and into the formalization of the economy will reap rewards, not least because, and you'll correct me if I'm wrong, but I think women tend to be more reliable repayers of loans than men on the whole, and I'm sure that makes some good financial sense as well as being the right thing to do. So, I think there are sort of three things I'd just like to pick out very briefly as areas where, through the work which you do on microfinance, I think there are big externalities. The first is that we promote fintech, for financial technology. And there is a good synergy between the UK and India, because India has done extraordinary things, frankly, in the last decade in terms of creating basic digital infrastructure. I mean, it must be about one of the biggest changes for most people of my age or above in India has been that transformation in terms of financial technology. And if I understand, that is financial technology, which is not just for the great, you know, the wealthy folks zooming around the nice bits of Mumbai. It's for everyone in this country. In other words, that is fundamentally transformative from the people who receive the awards today, for people all over this country. And that is an extraordinary achievement, I have to say. But that makes India a particularly good place in which to try and achieve the next bit of transformation. The UK, I think, has a lot to offer in financial technology. We are one of the world centres, alongside India, of developments. And I think that should be and is for the benefit of all. I think the second thing to say is that I think what you are doing should increase the resilience of India and of people in India. I've just come from a discussion in the British High Commission about how our staff are feeling over the last 2 years as they come back into the offices. I guess most people are coming back into the offices or have already been there. And one of the things everyone observes is there's been a hit on resilience. And these are relatively well-off people. I mean, imagine the resilience, the hit on your resilience if you don't have insurance, if people have been seriously ill. And I think that what you're doing to microfinance is essentially increasing the resilience of India. Giving possibility to people to have insurance, for example. Also giving people the possibility to sow more climate-resistant crops. I think of long-term resilience, and climate change is a great test of our long-term resilience. So financial technology, increasing resilience, including climate resilience. And finally, I think, as we've just had a brief demonstration, through what you are doing, you are changing the lives of women in particular. And you're giving them access, sometimes for the first time, to financial services, and to give role models as well for, as you increase inclusion in the economy, for the next generation of young boys and girls to see how you can work and how you can thrive in this very complicated time, irrespective of your gender. So I'm delighted that we've been able to support this work. I want to pay a particular thanks to Mamta, my colleague who's over there, who's led a lot of this work, and is another inspiring woman for me and for people in the High Commission. And it is an absolute pleasure to celebrate not only one of India's great successes, but really, in a way, laying the foundations for the great challenge and the great opportunity for the next 25 years. Thank you very much indeed.
Thank you very much, Your Excellency, for your insightful and forward-looking address. Ladies and gentlemen, moving on to the next segment of this event, the launch of the SIDBI Swabalamban Challenge Fund Series 3, Increasing Digital Footprint. Now, as outlined by CMD SIDBI Sitharaman in his welcome address, the main objective of this challenge fund is to attract ideas for innovative digital solutions, which will address the barriers to economic equality, cultivating entrepreneurship, developing financial independence, etc. in low-income pockets and underprivileged geographies. May I request the Honorable Finance Minister, Srimati Nirmala Sitharaman, to please launch this Swabalamban Challenge Fund at this juncture. Ladies and gentlemen, have the clicker presented to Madam. Can I request the dignitaries to come closer for the photo opportunity to Madam? And there we go. Ladies and gentlemen, put your hands together for the Swabalamban Challenge Fund. Thank you very much, ma'am. Thank you. Ladies and gentlemen, Microfinance Congress is a unique event. And in the fitness of things, as mentioned by the CMD of SIDBI Sitharaman, we are pleased to announce the first Financial Inclusion Icon Award today. It is said that a visionary statesman looks out into the future for the next generations, while an ordinary functionary is content with fulfilling the current responsibilities. The microfinance sector in India is fortunate to be nurtured by one such visionary. We are talking about none other than our beloved Brij Mohanji, whose initial bold step of providing seed funding to fledgling NGO MFIs has enabled the microfinance sector in India to find a ground grow and prosper over the last quarter century. Let me tell you, ladies and gentlemen, that Shri Brij Mohan started his career as an Indian Statistical Service Officer, served in erstwhile Planning Commission, and later joined Industrial Development Bank of India, and also to Small Industries Development Bank of India when it was carved out of IDBI in 1990. Now, after gaining insights from a study visit to Bangladesh, Shri Brij Mohan was instrumental in formulating the microcredit scheme in 1994, which kick-started SIDBI's path-breaking role in the evolution of microfinance in India. Shri Brij Mohan, who retired as the executive director of SIDBI, nurtured and mentored generations of professionals in microfinance, not only in SIDBI, but in the sector at large. Now, he continues to be active by guiding and nudging institutions to innovate, expand, and undertake impactful initiatives. In the past 2 decades, he has chaired many institutions linked to microfinance. We are indeed honored to give the first Financial Inclusion Icon Award to Shri Brij Mohan ji. May I invite Shri Brij Mohan to come on stage to receive the award, and I request the Honorable Chief Guest, Honorable Union Finance Minister Srimati Nirmala Sitharaman ji, to please hand over this award to Shri Brij Mohan ji. A standing ovation indeed, very deservedly so. Have another roaring round of applause, ladies and gentlemen, as we congratulate Shri Brij Mohan ji. Congratulations, sir. Thank you for joining us today, Shri Brij Mohan ji, and congratulations once again to you. Thank you. Thank you very much, madam, for doing the honors. And ladies and gentlemen, today we are truly honored to have in our midst Honorable Union Finance Minister Srimati Nirmala Sitharaman, who's going to be delivering the inaugural address of the 3rd National Microfinance Congress. We are so indebted to you, ma'am. I now invite you, respected madam, to please come up to the podium. Let's have a huge round of applause, ladies and gentlemen, once again for the Honorable Chief Guest.
Namaskar and good evening to all the participants, invited guests and dignitaries on the dais. I feel honored to be here in the 3rd National Microfinance Conference at a time when we are planning for India for the next 25 years, leading towards India at 100. SIDBI is about 31 years. A good time for SIDBI to also look at the way or ways in which it has been carrying out a mandate given by the Parliament to plan, promote and finance microfinance in this country. I would think all the 30 or over 30 years, SIDBI has done well for itself in building and moving from strength to strength. Although I would think the challenges which SIDBI may face from now for the next 25 years are going to be challenges which will make SIDBI's creativity to come out, I would think. Many creative, new out-of-the-box solutions are what is going to address the challenges which are likely to be before us. India is a country which depends on small and medium businesses to keep the bread and butter activities of the economy going. We periodically quote as to what the micro, in fact nano, micro, small, medium enterprises do to this country's economy. They actually keep it lubricated. They actually perform so well that nearly 40% of all our engineering exports are derived from the micro, small and medium enterprises. There are many other sectors from where MSMEs contribution for, let us say, the exports, for instance, is so significant. Handicrafts is thoroughly with the MSME sector, and I'm glad for it, because where there is a very big market available for handcrafted goods, our MSMEs in the handicraft sector have made a difference for themselves. But when we plan for the AMRIT KAAL, and when we expect credit to be available for small and medium industries, when government is thinking out of the box and coming up with farmer-producer organizations, or it is coming up with the bank schemes for financing street vendors, or when the Prime Minister comes up and says that he stands guarantee for banks to lend small enterprises run by women, for instance, where women are not expected to bring forward some security, where the Prime Minister again, even as early as 2014, as soon as the government was formed, thought in terms of financial inclusion and opened the Jan Dhan account. 44 crore people, if I'm right, are included in the Jan Dhan, and at a time when we all thought they're going to be zero balance accounts, but still we wanted them to be included. Today they surprise us with more than 1.40 lakh crores as deposits in their accounts. These are not small deposits, in the sense they are not big deposit in terms of the value of money, but they are trickles, all of which have made this big ocean of 1.4 lakh crores. So it's only for us to trust them and give all possible assistance and extend the credit facilitation which they so require, which otherwise they would have been running from pillar to post to get it. I wouldn't say they wouldn't have obtained. Some of them would have been able to access it, but it wouldn't have been available for everybody. During the pandemic, we also made sure that just as we were extending the emergency credit liquidity guarantee scheme for MSMEs, we also made sure through one of the announcements that the last mile funding, which is so required for small businesses which are in far-flung areas, or even for small retail borrowers, we extended a scheme, again credit guaranteed by the government, for MFIs to reach out to the last borrower, and the last borrower being one of those small borrowers who borrows only up to a lakh or so for his business, and for his even small activities like doing some repair work in his house, or buying some kind of a raw material for his business, or even taking a smallish vehicle loan, a two-wheeler loan, and so on. So the point that I'm trying to highlight here is, since after 2014, every time there is a planning session for thinking what next, what is to be addressed, or any time planning happens in response to a situation developing in the ground, the first consideration is about, all things said, will we be serving the MSME sector or not? Will we be helping through the microfinance institutions, those sections which are otherwise so difficult to access banking facilities? So we've made that as a one of the boxes to surely tick after doing due diligence. In that process, I recognize the importance of microfinance institutions. It's they who are going to make credit outreach absolutely workable. They have the network, they have the access, they are present in most difficult terrains of this country, and therefore I would think for instance, the RBI taking various measures so that banks get affordable money, which they can do onward lending for MFIs, is a wonderful step which helped us during the pandemic. I think they called it LTRO or something like that. So the LTRO schemes which the RBI brought in, and they brought it twice over, so that money is available for banks, which they can on-lend to MFIs, and because of that, it could reach all parts of the country. And I can for sure say that that has been one of the very good out-of-the-box ways in which the Reserve Bank of India made sure that MFIs do get monies, because we were reaching a time since 2019, which got sorted out a bit between 20 and 21, when the quality of papers which were available with NBFCs were not really very good. We had to still come out of a certain situation, so that irrespective of the quality of papers, we were able to give them that kind of a extension of credit, and which worked because of these out-of-the-box ways. And that is why when I started telling you, SIDBI and its laid out processes have stood the test of time, and you've tried doing maximum work, which has made a difference. But now, that's not going to be just enough. We now need SIDBI to be probably getting a lot of inputs from the ground, to be talking to NBFCs and MFIs, to understand what next and how best can a greater robustness can be brought into the system, so that this real-time dynamic is what is going to give them more ways of funding MFIs. Now, I know to their credit, I must say this, many MFIs which were serviced by the SIDBI are the ones who have now graduated to become small finance and to small lending banks. And this transition itself is very much enabled by the SIDBI, and I give them their due credit for having facilitated this process. But of late, I understand they've also directly started dealing with small enterprises. Is that called Prayas? Through Prayas, they're making this direct attempt, which I think has got to be given more energy. This year and the next couple of years, we need that kind of an approach which can make sure that those entrepreneurs who are down there waiting for some kind of an institutional credit can be brought in. And through that, I'm able to see there's a lot of support mechanism. That one example which was taken, I think, by Shri Rajesh Agarwal is an anecdotal and a good example. But that is the kind of change which is happening in the way in which a lot of people are coming out of formal jobs into being self-employed. There is definitely a reshaping of our economy to that extent that people are now making their choice. What you hear about the United States may not be so much about UK, probably it's applicable to the UK as well. Many people are not choosing to go back to their work in the US. I'm not talking about India. And many of them are not even claiming their, what you call, job allowances. So if they are unemployed, they get a dole. They're not even claiming that. Many of them are even looking at ways in which they can think of other alternatives. I'm not comparing the American situation with Indian, but in India, there is definitely a lot of different thinking which is going on among our youngsters, among people who are in their mid-30s, early 40s, where now people are thinking maybe they can do something within the area in which they originally belong to or they live. And as a result, I take a tangential example, the e-Shram portal, which the government started, wherein we wanted a lot of these workers to come on board and say what is the kind of skill they have, what is the kind of work they've been doing, what is it that they can do. That e-Shram portal, since it was launched, has had more than 28 crore people coming on board and talking about various skills that they have. And unbelievably, it has gone to such granular levels that more than 400 types of skills have emerged out of that e-Shram portal. The long and short of what I want to convey here is people with some skills, some skills, are also looking at ways in which they can utilize those skills and work within their own areas and be able to earn their livelihood. There is this gradual shift towards, can I do my own? Will there be finance available for me? Will institutions help me? And I think this is the best moment for institutions like SIDBI to be able to do its outreach, in fact, I would say by district, and understand the requirements of that district, do a mapping of what will be required versus what is available in terms of skills, and plan for your next 25 years. That is what you've given here. One or two things on that which I would like to flag is many of the states have a lot of current account and savings account deposits with them, the CASA. which are not effectively being deployed in their own states or in their own regions because there are no big business credit offtake there. As a result, the impression that one gets is the CASA from that area moves to more business prospective rich areas which can absorb that kind of money. Now that gradually can lead to a situation where our savings are not being used for our business entrepreneurship. But does that entrepreneurship exist in those areas, or is it existing but is dormant? I would think it's the job of SIDBI-like institutions to awaken that dormant demand which is lying there of skills, which should be given some backup to say, start your own, we are here to fund you, and we'll do that. We'll do that to promote your own need to do your business. That way, we will be instilling a lot of strength to those people who've been left unattended to, so that their businesses can prosper, their ideas can survive. Many of the startups may also be given some challenges in those areas about what kind of innovations can help in reviving business keenness. Similarly, in that mapping, I would think one of the things that you should look at is how microfinance institutions themselves can identify the demand. After all, they are people from that area. Why can't you tell us what is going to be workable there, what is prospective there? And government's announcement, one product, one district, which has taken off very well as much as I know, in Uttar Pradesh, for instance, because I've gone there, seen 2 or 3 major activities funded by banks, which are promoting the local handiwork of people there, handcraft skills, the skills that people have in that area, which are highly desirous for marketing purposes, are all doing very well. Such handworks which probably did not find a market are now finding market because the government has decided to recognize them as the product of the district. There is marketing technologies being adopted. E-marketing facilitators are also being brought into this situation, and funds are available. Both central government and state government are putting in money for creating common facilities. If there is some kind of a painting work to be done, common facility, supply of gas for that unit, and also computers and internet connectivity, so that they can use the market and so on. So there is government, both center and state are working together, identifying districts and their products, and for that, skilling is also being brought in. So if credit is available, common working facilities are available, marketing is being tied up through e-market facilities, I can't see anything that can stop organizations like SIDBI to be able to access MFIs, who through them obtain the money and give them and promote local entrepreneurship. I've elaborated it a bit too far, but that is the kind of last mile and granular detail to which some of our institutions should go forward. Policy support exists, financial support exists through banks. I am sure the Secretary Finance will be happy to work with SIDBI. So for the next 25 years, we have to be a lot more people-centric. Try to see what they want, try to see how to build it, try to see how we can strengthen it. It should be one of the ways in which that works like a magnet to draw people belonging to that region to be drawn back to their own places. And if we can give them a prospect which is good enough, I think we'll be addressing a major problem related to human resource and also awaken those capacities which are lying dormant in many regions. I don't want to get into detailing about what SIDBI should do in the AMRIT KAAL, but I've just flagged 1 or 2 matters which may be of use. मैं हिंदी भाषा बोलने वाले प्रांत में खड़े होकर के बात कर रही हूँ, इसीलिए थोड़ा मेरा टूटा फूटा हिंदी में मैं बात करना चाह रही हूँ। जो महिला गण आज इतना प्रशंसनीय काम किए हैं और हमारे सामने आपके हाथ का किए हुए काम का उदाहरण दिखाए, उन सभी महिलाओं को मेरा बधाई। और मैं आपसे एक विनती करना चाहती हूँ, सरकार जो भी राज्य से आप आए हो, मगर सरकार, केंद्र सरकार भी, राज्य सरकार भी ऐसे सिडबी जैसे इंस्टीट्यूशंस के साथ काम करके आप तक सुविधा मिलने के लिए हर कोशिश कर रही है। आप उसका फायदा उठाना चाहिए और फायदा उठाना चाहिए, और ज़्यादा से ज़्यादा इस फायदा जो आपको पहुंच रही है उसके बारे में आपके परिवार में, आपके दोस्तगण के आपस में, आपके मुंह के द्वारा जब बात आते हैं, मौखिक विषय सुनते हैं लोग, फिर लोगों को भरोसा होता है कि सरकार के द्वारा कुछ काम हो रही है, अच्छा काम हो रही है, आप उसमें उपलब्धि लिए हैं। इसीलिए एडवर्टाइजमेंट हो, पोस्टर हो, फ्लेक्स हो, ये सब उनके अपने स्थान पर, मगर जब बात करते हो उससे आप जैसे बहुत सारे महिलाओं को ज़्यादा उपलब्धि मिलने में संभावना रहता है। इसीलिए मैं आपसे हाथ जोड़ करके विनती करती हूँ कि आप ज़रूर इसके बारे में आपके सहेलीगण से, आपके परिवार से बात करिए। ऐसे उपलब्धि बहुत सारे लोगों को पहुँचना आवश्यक है। उसके द्वारा ही सबका साथ, सबका विकास होने का संभावना है। धन्यवाद।
Thank you very much, ma'am, for that enlightening and truly awe-inspiring inaugural address. We're truly indebted and honored, ma'am, to have you with us today. I'd like to, at this juncture, thank all our esteemed guests gracing the dais for the inaugural panel, for joining us and for helping us set the tenor of the 3rd Microfinance Congress with your insightful addresses. I'm going to request you to give us a photo opportunity, a group photo opportunity together. And with that, ladies and gentlemen, very shortly we'll take a break. Once again, a big round of applause for the Honorable Union Finance Minister, Srimati Nirmala Sitharaman, and our esteemed dignitaries. Thank you to Shri Rajesh Agarwal, to Shri Sanjay Malhotra, to His Excellency British High Commissioner to India, Shri Alex Ellis, and Shri S. Raman. A big round of applause once again for them, ladies and gentlemen. The photographer seeks a photo opportunity, if that's possible, esteemed dignitaries. Ladies and gentlemen, from here we're going to be taking a very short refreshment break, a tea break of 15 minutes. We have some extremely interesting and informative panel discussions coming on the other side of this break. So I'm going to request and urge you to please come back in exactly 15 minutes so that we can still stay on time. We're maybe lagging a few minutes behind, ladies and gentlemen. I would urge and request you to please come back in 15 minutes after taking that break. Thank you very much once again.
वैसे शादी कितनी अच्छी थी ना? क्यों भैया?
तू रुक, इससे भी बढ़िया शादी करवाऊंगा मैं तेरी। बस एक बार नौकरी लगने दे।
अरे भैया, अरे ये कहाँ जा रहे हो? बस भाई साहब, 1 मिनट का काम है। आगरा वाला माल डिलीवर हो गया। रामपुर वाले रूट पे एक गाड़ी और बढ़ा दो। अच्छा चलो, हम शाम को आते हैं। हाँ, तो हम चल।
काका, ये सब आपका?
हाँ।
लेकिन फिर भी आप ये ऑटो चलाते हैं?
बेटा, कामयाबी आ गई तो मेहनत करना छोड़ दोगे?
पर ये सब आपने किया कैसे?
लेकिन साहब,
चली रे नदिया, चली रे नदिया, जाना है जाना बड़ी दूर दूर रे, मंजिल पाना है जरूर। मन में इरादे लिए जाने कितने वादे लिए, हारना नहीं मंजूर दूर रे, जाना है जाना बड़ी दूर। जाना है जाना बड़ी दूर दूर रे, मंजिल मंजिल पाना है जरूर। किस्मत की हर लकीर खींचते हैं सच्चे वीर।
बहुत बड़ा आदमी निकला ये तो। नौकरी मांग लेता इससे।
नौकरी से बहुत ज्यादा दे दिया इन्होंने। अब तो मामा जी खुद का कुछ करूंगा। आखिर इसकी शादी जो करवानी है धूमधाम से।
चले।
जाग गया देश मेरा, निकल पड़ा देश मेरा, आंखों में लिए एक नया नूर नूर रे, जाना है जाना बड़ी दूर।
अरे छोटू 12 नंबर साफ करेगा?
थैंक यू अंकल। दीदी
हाँ
एक चाय मिलेगी?
हाँ। छोटू 10 नंबर पे चाय दे।
चलेगा?
चलेगा, पर आधी रोटी मैं खाऊंगी। हाँ ये तूने बनाया? अच्छा है। यहाँ क्या कर रही है?
अस्पताल जा रहे हैं। वो पापा की तबीयत आजकल।
तो नजदीक कुछ नहीं है?
है पर बहुत महंगा है।
तो तू काम कर ले ना।
कहाँ दीदी, सबके पास आपकी तरह हुनर कहाँ होता है। ये सब इतना बड़ा कैसे बनाया आपने?
चली रे नदिया, चली रे नदिया, जाना है जाना बड़ी।
खाना बहुत अच्छा है। आपकी दुकान किधर है? हाथों में स्वाद है आपके।
मंजिल पाना है जरूर दूर रे, मंजिल पाना है जरूर। हो चलते जा ऊंचे ऊंचे उड़ना है, आसमां से जुड़ना है, मंजिल को पाना है जरूर रे।
दीदी नमस्कार।
मंजिल पाना है जरूर।
बस में खाना खाता था मैं।
किस्मत की हर लकीर खींचते हैं सच्चे बीर, आंखों में आशाएं भरपूर दूर रे, जाना है जाना बड़ी दूर।
छोटे हुनर तो सब में होता है, तुझ में भी है।
बेटा बेटा कहाँ खोई है?
खोई नहीं है पापा, अभी तो रास्ता मिला है हमें।
जाग गया देश मेरा, निकल पड़ा देश मेरा, आंखों में लिए एक नया नूर नूर।
C for boy, C for cat.
कितना हाईफाई स्कूल है यार। अपनी पीहू यहाँ पढ़ेगी ना, ये तो अंग्रेज बन जाएगी पूरी।
सपना तो बढ़िया है, पर थोड़ा महंगा है नहीं? अपनी तनख्वाह के हिसाब से कोई और स्कूल ढूंढ लेते हैं।
एक्सक्यूज मी, देखिए बुरा मत मानिएगा, लेकिन आपके सपने हैं ना वो महंगे नहीं हैं, वो बस बेचैन नहीं है। आप ही की तरह मेरी नौकरी भी मेरी बेटी की अच्छी पढ़ाई के बीच में आती थी,
फिर
छोड़ दिया। क्या?
सपने देखना नहीं, नौकरी को छोड़ दिया।
लेकिन ये सब आपने किया कैसे?
बताता हूँ।
चली रे नदिया, चली रे नदिया, जाना है जाना बड़ी दूर दूर रे, मंजिल पाना है जरूर। मन में इरादे लिए हो,
अरे ध्यान से।
मन में इरादे लिए, जाने कितने वादे लिए, हारना नहीं मंजूर दूर रे, जाना है जाना बड़ी दूर। किस्मत की हर लकीर खींचते हैं सच्चे वीर, आंखों में आशाएं भरपूर दूर रे, जाना है जाना
देखिए,
बड़ी।
सपने देखना कभी मत छोड़िए, बल्कि उन्हें बेचैन कीजिए, तभी तो वो पूरे होंगे ना।
आशु, क्या सोच रहे हो?
मेरी नौकरी पीहू का भविष्य नहीं लिखेगी, वो तो एक खुद लिखेगी ना, किसी ऐसे हाईफाई स्कूल में पढ़कर।
जाग गया देश मेरा, निकल बड़ा देश मेरा, आंखों में लिए एक नया नूर।
प्रयास लोन, सिडबीज डिजिटल प्रयास पार्टनर जर्नी। आइए देखते हैं इस डिजिटल इनिशिएटिव की जर्नी। इस इनिशिएटिव में पार्टनर इंस्टीट्यूशन के माध्यम से सिडबी के द्वारा लोन प्राप्त किया जा सकता है। सिडबी की प्रयास स्कीम की मदद से अपना छोटा व्यवसाय शुरू करने के लिए उद्यमी पार्टनर इंस्टीट्यूशन के ऑफिसर से संपर्क करता है और उसके केवाईसी डॉक्यूमेंट और बेसिक लोन इंफॉर्मेशन लेकर पार्टनर इंस्टीट्यूशन का ऑफिसर प्रयास ऐप में लॉगिन करता है। उसके द्वारा कस्टमर का आधार नंबर डालकर कस्टमर के केवाईसी वेरिफिकेशन की प्रक्रिया की जाती है। पार्टनर इंस्टीट्यूशन लोन डिटेल्स और बेसिक इंफॉर्मेशन के साथ ही इनकम एक्सपेंडिचर इंफॉर्मेशन भी फिल करता है। इसके बाद पार्टनर इंस्टीट्यूशन ऑनलाइन ब्यूरो से डाटा प्राप्त कर आगे की प्रक्रिया शुरू करता है। इसके बाद पार्टनर इंस्टीट्यूशन ऑफिसर लोन एप्लीकेशन को पार्टनर इंस्टीट्यूशन चेकर के पास भेजता है। पार्टनर इंस्टीट्यूशन चेकर डाटा को वेरीफाई कर लोन एप्लीकेशन को सिडबी में फॉरवर्ड करता है। सिडबी लोन ऑफिसर प्रयास ऐप में लॉगिन कर डाटा वेरीफाई करता है और सैंक्शन करने के लिए सिडबी चेकर को भेज देता है। सिडबी चेकर डाटा चेक कर लोन सैंक्शन कर देता है। अब पार्टनर इंस्टीट्यूशन लोन ऑफिसर डॉक्यूमेंट्स की ई साइनिंग और ई स्टैंपिंग की प्रक्रिया यानी प्रोसेस शुरू करता है। इसके बाद कस्टमर और सिडबी ऑफिशियल को एसएमएस और ईमेल द्वारा NESL से डिजिटल डॉक्यूमेंट्स का लिंक प्राप्त होता है। कस्टमर लिंक को OTP द्वारा खोलता है और उसके बाद निर्धारित डॉक्यूमेंट्स इलेक्ट्रॉनिकली ई साइंड और ई स्टैम्प्ड हो जाते हैं। इसी तरह सिडबी ऑफिसर भी OTP डालकर लिंक खोलता है और उसके द्वारा निर्धारित डॉक्यूमेंट्स इलेक्ट्रॉनिकली ई साइंड और ई स्टैम्प्ड किए जाते हैं। अब पार्टनर इंस्टीट्यूशन लोन डिसबर्समेंट रिक्वेस्ट इनिशिएट करता है और पार्टनर इंस्टीट्यूशन चेकर इसे दोबारा चेक और अप्रूव कर सिडबी को आगे भेज देता है। सिडबी ऑफिसर दोबारा डिसबर्समेंट रिक्वेस्ट को वेरीफाई करता है और सिडबी चेकर लोन अमाउंट और अकाउंट डिटेल्स वेरीफाई कर लोन अमाउंट बेनिफिशियरी यानी लाभार्थी के खाते में क्रेडिट कर देता है। इस तरह बड़ी आसानी से सिडबी और पार्टनर इंस्टीट्यूशन के माध्यम से बहुत ही कम समय में लोन प्राप्त कर छोटे उद्यमी अपनी जीविका का साधन अपना रहे हैं। प्रयास ऐप से अपने प्रयासों को सफल बनाएं। सिडबी आपके साथ है, सिर्फ एक प्रयास की बात है।
वैसे शादी कितनी अच्छी थी ना, क्यों भैया?
तू रुक, इससे भी बढ़िया शादी करवाऊंगा मैं तेरी। बस एक बार नौकरी लगने दे।
अरे भैया, अरे ये कहाँ जा रहे हो?
बस भाई साहब 1 मिनट का काम है। आगरा वाला माल डिलीवर हो गया। रामपुर वाले रूट पे एक गाड़ी और बढ़ा दो। अच्छा चलो हम शाम को आते हैं। हाँ तो हम चल।
काका ये सब आपका? हाँ। लेकिन फिर भी आप ये ऑटो चलाते हैं।
बेटा कामयाबी आ गई तो मेहनत करना छोड़ दोगे?
पर ये सब आपने किया कैसे?
लेकिन साहब
चली रे नदिया, चली रे नदिया, जाना है जाना बड़ी दूर दूर रे, मंजिल पाना है जरूर। मन में इरादे लिए जाने कितने वादे लिए, हारना नहीं मंजूर, दूर रे जाना है जाना बड़ी दूर। जाना है जाना बड़ी दूर, दूर रे मंजिल पाना है जरूर। किस्मत की हर लकीर खींचते हैं सच्चे वीर।
बहुत बड़ा आदमी निकला ये तो, नौकरी मांग लेता इससे।
नौकरी से बहुत ज्यादा दे दिया इन्होंने, अब तो मामा जी खुद का कुछ करूंगा। आखिर इसकी शादी जो करवानी है धूमधाम से।
चले।
जाग गया देश मेरा, निकल पड़ा देश मेरा, आंखों में लिए एक नया नूर, नूर रे जाना है जाना बड़ी दूर।
अरे छोटू 12 नंबर साफ करेगा?
थैंक यू अंकल। दीदी,
हाँ
एक चाय मिलेगी?
हाँ। छोटू 10 नंबर पे चाय दे।
चलेगा?
चलेगा, पर आधी रोटी मैं खाऊंगी। हाँ, ये तूने बनाया? अच्छा है। यहाँ क्या कर रही है?
अस्पताल जा रहे हैं। वो पापा की तबीयत आजकल।
तो नजदीक कुछ नहीं है?
है, पर बहुत महंगा है।
तो तू काम कर ले ना।
कहाँ दीदी, सबके पास आपकी तरह हुनर कहाँ होता है। ये सब इतना बड़ा कैसे बनाया आपने?
चली रे नदिया, चली रे नदिया, जाना है जाना बड़ी दूर।
खाना बहुत अच्छा है, आपकी दुकान किधर है? हाथों में स्वाद है आपके।
मंजिल पाना है जरूर, दूर रे मंजिल पाना है जरूर। हो चलते जा ऊंचे ऊंचे उड़ना है, आसमां से जुड़ना है, मंजिल को पाना है जरूर रे।
दीदी नमस्कार।
मंजिल पाना है जरूर,
बस में खाना खाता था मैं।
किस्मत की हर लकीर खींचते हैं सच्चे वीर, आंखों में आशाएं भरपूर, दूर रे जाना है जाना बड़ी दूर।
छोटे, हुनर तो सब में होता है, तुझ में भी है।
बेटा बेटा कहाँ खोई है?
खोई नहीं है पापा, अभी तो रास्ता मिला है हमें।
जाग गया देश मेरा, निकल पड़ा देश मेरा, आंखों में लिए एक नया नूर, नूर।
B for boy, C for cat.
कितना हाई-फाई स्कूल है यार। अपनी पीहू यहाँ पढ़ेगी ना, ये तो अंग्रेज बन जाएगी पूरी।
सपना तो बढ़िया है, पर थोड़ा महंगा है नहीं? अपनी तनख्वाह के हिसाब से कोई और स्कूल ढूंढ लेते हैं।
एक्सक्यूज मी, देखिए बुरा मत मानिएगा, लेकिन आपके सपने हैं ना, वो महंगे नहीं हैं, वो बस बेचैन नहीं है। आप ही की तरह मेरी नौकरी भी मेरी बेटी की अच्छी पढ़ाई के बीच में आती थी,
फिर
छोड़ दिया।
क्या?
सपने देखना नहीं, नौकरी को छोड़ दिया।
लेकिन ये सब आपने किया कैसे?
बताता हूँ।
चली रे नदिया, चली रे नदिया, जाना है जाना बड़ी दूर, दूर रे मंजिल पाना है जरूर। मन में इरादे लिए हो,
अरे ध्यान से।
मन में इरादे लिए जाने कितने वादे लिए, हारना नहीं मंजूर, दूर रे जाना है, जाना बड़ी दूर। किस्मत की हर लकीर खींचते हैं सच्चे वीर, आंखों में आशाएं भरपूर, दूर रे जाना है, जाना बड़ी।
देखिए, सपने देखना कभी मत छोड़िए, बल्कि उन्हें बेचैन कीजिए, तभी तो वो पूरे होंगे ना।
आशु, क्या सोच रहे हो?
मेरी नौकरी पीहू का भविष्य नहीं लिखेगी, वो तो एक खुद लिखेगी ना, किसी ऐसी हाईफाई स्कूल में पढ़कर।
जाग गया देश मेरा, निकल पड़ा देश मेरा, आंखों में लिए एक नया नूर।
प्रयास लोन, सिडबीज डिजिटल प्रयास पार्टनर जर्नी। आइए देखते हैं इस डिजिटल इनिशिएटिव की जर्नी। इस इनिशिएटिव में पार्टनर इंस्टीट्यूशन के माध्यम से सिडबी के द्वारा लोन प्राप्त किया जा सकता है। सिडबी की प्रयास स्कीम की मदद से अपना छोटा व्यवसाय शुरू करने के लिए उद्यमी पार्टनर इंस्टीट्यूशन के ऑफिसर से संपर्क करता है और उसके केवाईसी डॉक्यूमेंट और बेसिक लोन इंफॉर्मेशन लेकर पार्टनर इंस्टीट्यूशन का ऑफिसर प्रयास ऐप में लॉगिन करता है। उसके द्वारा कस्टमर का आधार नंबर डालकर कस्टमर के केवाईसी वेरिफिकेशन की प्रक्रिया की जाती है। पार्टनर इंस्टीट्यूशन लोन डिटेल्स और बेसिक इंफॉर्मेशन के साथ ही इनकम एक्सपेंडिचर इंफॉर्मेशन भी फिल करता है। इसके बाद पार्टनर इंस्टीट्यूशन ऑनलाइन ब्यूरो से डाटा प्राप्त कर आगे की प्रक्रिया शुरू करता है। इसके बाद पार्टनर इंस्टीट्यूशन ऑफिसर लोन एप्लीकेशन को पार्टनर इंस्टीट्यूशन चेकर के पास भेजता है। पार्टनर इंस्टीट्यूशन चेकर डाटा को वेरीफाई कर लोन एप्लीकेशन को सिडबी में फॉरवर्ड करता है। सिडबी लोन ऑफिसर प्रयास ऐप में लॉगिन कर डाटा वेरीफाई करता है और सैंक्शन करने के लिए सिडबी चेकर को भेज देता है। सिडबी चेकर डाटा चेक कर लोन सैंक्शन कर देता है। अब पार्टनर इंस्टीट्यूशन लोन ऑफिसर डॉक्यूमेंट्स की ई साइनिंग और ई स्टैंपिंग की प्रक्रिया यानी प्रोसेस शुरू करता है। इसके बाद कस्टमर और सिडबी ऑफिशियल को एसएमएस और ईमेल द्वारा NESL से डिजिटल डॉक्यूमेंट्स का लिंक प्राप्त होता है। कस्टमर लिंक को OTP द्वारा खोलता है और उसके बाद निर्धारित डॉक्यूमेंट्स इलेक्ट्रॉनिकली ई साइंड और ई स्टैम्प्ड हो जाते हैं। इसी तरह सिडबी ऑफिसर भी OTP डालकर लिंक खोलता है और उसके द्वारा निर्धारित डॉक्यूमेंट्स इलेक्ट्रॉनिकली ई साइंड और ई स्टैम्प्ड किए जाते हैं। अब पार्टनर इंस्टीट्यूशन लोन डिसबर्समेंट रिक्वेस्ट इनिशिएट करता है और पार्टनर इंस्टीट्यूशन चेकर इसे दोबारा चेक और अप्रूव कर सिडबी को आगे भेज देता है। सिडबी ऑफिसर दोबारा डिसबर्समेंट रिक्वेस्ट को वेरीफाई करता है और सिडबी चेकर लोन अमाउंट और अकाउंट डिटेल्स वेरीफाई कर लोन अमाउंट बेनिफिशियरी यानी लाभार्थी के खाते में क्रेडिट कर देता है। इस तरह बड़ी आसानी से सिडबी और पार्टनर इंस्टीट्यूशन के माध्यम से बहुत ही कम समय में लोन प्राप्त कर छोटे उद्यमी अपनी जीविका का साधन अपना रहे हैं। प्रयास ऐप से अपने प्रयासों को सफल बनाएं। सिडबी आपके साथ है, सिर्फ एक प्रयास की बात है।
वैसे शादी कितनी अच्छी थी ना? क्यों भैया?
तू रुक, इससे भी बढ़िया शादी करवाऊंगा मैं तेरी। बस एक बार नौकरी लगने दे।
अरे भैया, अरे ये कहाँ जा रहे हो?
बस भाई साहब 1 मिनट का काम है। आगरा वाला माल डिलीवर हो गया। रामपुर वाले रूट पे एक गाड़ी और बढ़ा। अच्छा चलो हम शाम को आते हैं। हाँ तो हम चल।
काका ये सब आपका?
हाँ।
लेकिन फिर भी आप ये ऑटो चलाते हैं।
बेटा कामयाबी आ गई तो मेहनत करना छोड़ दोगे?
पर ये सब आपने किया कैसे?
लेकिन साहब
चली रे नदिया, चली रे नदिया, जाना है जाना बड़ी दूर दूर रे, मंजिल पाना है जरूर। मन में इरादे लिए जाने कितने वादे लिए, हारना नहीं मंजूर दूर रे, जाना है जाना बड़ी दूर। जाना है जाना बड़ी दूर दूर रे, मंजिल पाना है जरूर। किस्मत की हर लकीर खींचते हैं सच्चे वीर,
बहुत बड़ा आदमी निकला ये तो। नौकरी मांग लेता इससे।
नौकरी से बहुत ज्यादा दे दिया इन्होंने। अब तो मामा जी खुद का कुछ करूंगा। आखिर इसकी शादी जो करवानी है धूमधाम से।
चले।
जाग गया देश मेरा, निकल पड़ा देश मेरा, आंखों में लिए एक नया नूर नूर रे, जाना है जाना बड़ी दूर।
अरे छोटू 12 नंबर साफ करेगा?
थैंक यू अंकल।
दीदी हाँ
एक चाय मिलेगी?
हाँ छोटू 10 नंबर पे चाय दे।
चलेगा?
चलेगा, पर आधी रोटी मैं खाऊंगी। हाँ ये तूने बनाया? अच्छा है। यहाँ क्या कर रही है?
अस्पताल जा रहे हैं। वो पापा की तबीयत आजकल।
तो नजदीक कुछ नहीं है?
है पर बहुत महंगा है।
तो तू काम कर ले ना।
कहाँ दीदी, सबके पास आपकी तरह हुनर कहाँ होता है। ये सब इतना बड़ा कैसे बनाया आपने?
चली रे नदिया, चली रे नदिया, जाना है जाना बड़ी दूर।
खाना बहुत अच्छा है। आपकी दुकान किधर है? हाथों में स्वाद है आपके।
मंजिल पाना है जरूर दूर रे, मंजिल पाना है जरूर। हो चलते जा ऊंचे ऊंचे उड़ना है, आसमां से जुड़ना है, मंजिल को पाना है जरूर रे।
दीदी नमस्कार।
पाना है जरूर।
बस में खाना खाता था मैं।
किस्मत की हर लकीर खींचते हैं सच्चे वीर, आंखों में आशाएं भरपूर दूर रे, जाना है जाना बड़ी दूर।
छोटे हुनर तो सब में होता है, तुझ में भी है।
बेटा बेटा कहाँ खोई है?
खोई नहीं है पापा, अभी तो रास्ता मिला है हमें।
जाग गया देश मेरा, निकल पड़ा देश मेरा, आंखों में लिए एक नया नूर नूर।
B for boy, C for cat.
कितना हाई-फाई स्कूल है यार। अपनी पीहू यहाँ पढ़ेगी ना, ये तो अंग्रेज बन जाएगी पूरी।
सपना तो बढ़िया है।
To the second segment of the day, which comprises of panel discussions on 3 topical and exciting themes with expert moderators and panelists. May I request you to please take your seats, ladies and gentlemen. The upcoming microfinance regulations are expected to usher in a new era for the sector, one that would move the needle towards microfinance, contributing more tangibly to financial inclusion. Our first panel discussion, ladies and gentlemen, Microfinance 3.0 towards greater financial inclusion, will throw light on just this. And for this, let us first welcome our moderator on stage, Ms. Lata Venkatesh, Executive Editor, CNBC TV 18. Welcome, ma'am. Warm welcome to you. Ms. Lata. Let me now invite our panelists, Shri J.P. Sharma, the Chief General Manager, Department of Regulation, Reserve Bank of India. Let's welcome him on stage with a big round of applause. He has domain expertise on policy matters related to microfinance sector. Warm welcome, sir. I'd like to invite Dr. Alok Mishra, Chief Executive Officer and Director, Microfinance Institutions Network, with a big round of applause. Please help me welcome him. May I invite Dr. P. Satish, Executive Director, Sadhan. Let's welcome Dr. P. Satish, Executive Director, Sadhan, on stage with a round of applause. And let me tell you, ladies and gentlemen, both Shri Satish and Dr. Alok are known, very well-known faces in the microfinance fraternity. So a warm welcome to you both. Let me invite on stage Ms. Mamta Kohli, Senior Social Development Advisor, Foreign Commonwealth and Development Office. Let's welcome her on stage with a round of applause. She has cross-sectoral expertise in the area of financial inclusion. And I'd like to invite Shri Rajiv Yadav, Managing Director and Chief Executive Officer, FinCare Small Finance Bank. Let's welcome him on stage with a big round of applause. And as we know, FinCare Small Finance Bank is one of the first SFBs set up in the country. So let's welcome all of our esteemed panelists on stage with a huge consolidated round of applause. And with that, I'm going to hand over the proceedings of this session to Ms. Lata Venkatesh. Ma'am, please take it away.
Thank you very much. Our mandate is to discuss the role of microfinance or the growth of microfinance in India. The larger piece is, I'll just read out the headline itself. It's towards greater financial inclusion. That's the larger story. But like all financial products, there is a fine print. The fine print is the small story. How does the latest Reserve Bank consultative paper, which was put out last year, how does it improve the financial inclusion in the country? How does it improve the climate of regulation and the quality of microfinance in the country? We will, of course, try and dovetail both how the regulation can change or should change according to the Reserve Bank consultative paper. Why should the regulations change? And eventually, whether the broader goal of increase in the microfinance universe can be effected given that there are more digital ways to capture data. That will be the larger universe that we will discuss. We have with us, of course, Mr. J.P. Sharma, who's the Chief General Manager, Department of Regulation from the Reserve Bank of India. We have Mamta Kohli, who's going to give us the external, or rather the larger picture, since she is from the Foreign Commonwealth and Development Office. Mr. Alok Mishra from MFIN and Mr. P. Satish, the Executive Director from Sadhan, are the self-regulating organizations. So they have a very important role in the regulation that Reserve Bank is proposing. And we have someone from the field itself, Mr. Rajiv Yadav, who is the Manager and CEO of FinCare Small Finance Bank. Gentlemen, and Mamta, thank you very much for joining us. First up, let's clearly get to the task at hand. How can regulation improve? The Reserve Bank's consultative paper actually removes certain controls. There are only 2 occasions when Reserve Bank has come into the field of regulating microfinance. For a long time, up until 2010, Reserve Bank refused to regulate microfinance too much because it wanted the sector to grow. But because of the Andhra Pradesh problems in 2011, the Malegaon Committee recommended certain regulations which were applicable to the NBFC microfinance institutions. But the consultative paper of the Reserve Bank, which came out in 2021, said that the NBFC microfinance regulation covers only a small segment, and rather than regulating institutions, let us regulate the activity of microfinance, whether it is done by a bank or an NBFC or an MFI defined as MFI. That was the purpose behind the law. But what were the other compulsions? Let's first get the regulator to speak for itself or for himself, and then we will ask for reactions. So, Mr. Sharma, the first ball is being bowled to you. Why the consultative paper? Are you worried about what are the concerns in the microfinance segment that has triggered this consultative paper?
Thank you, Lata. Let's go back in history a little. As you said, the current microfinance regulatory framework came about in 2011.
I don't think you can be heard.
Is it okay now?
Yeah.
Okay. So the current microfinance regulatory framework came out in 2011 in the aftermath of Andhra Pradesh microfinance crisis. based on the Malegaon committee report. That particular framework had one specific objective in mind. It was about protection of smaller borrowers, because it came out in the aftermath of epic microfinance crisis. So obviously, understandably, they had to protect the interests of the smaller borrowers. That framework, or the current framework, has very specific guidelines and instructions for protecting the interests of the smaller borrowers. That was very well intended at that time. But then thereafter there have been many developments. In 2015, Bandhan became universal bank. Thereafter, 8 MFIs converted to SFBs. One of the largest MFIs, Bharat Financial, that merged with IndusInd. Now, the net result of all that is, the MFIs, so-called NBFC MFIs, they contribute just about 32-33% of total microfinance portfolio in the country. So what it means is, the original protective guidelines which are applicable to all NBFC MFIs, they are not applicable to banks and other NBFCs. Yeah. And on the other hand, we are getting reports of aggressive lending and recovery practices. Now, there are allegations from both sides. Who's to blame and who's not to blame, or whether MFIs are doing or non-MFIs are doing. That's a different story. So that's one part of the situation.
No, I get that you want to regulate the activity and not the entity. But just to come to a slightly more specific question, the Malegaon recommendations, or the rules which came after the Malegaon recommendations, put a cap on the spread of the MFI, that the margin difference between the cost of money and the rate at which they lent should not be more than 10%. You want even that cap removed. Could that be a little usurious? Could that lead to people charging anything?
Well, it's very hard to guess the future right now, but we discussed this thing with a lot of stakeholders. We discussed it internally. For a long time we discussed it. But then we came to a conclusion that, probably this is the best way forward. Okay. Now, I'll tell you why. We have given caps for NBFC MFIs, but then those regulatory caps are behaving as if, those are the minimum rates. Now, we have banks whose cost of fund is just 5.5 or 6%. They are also charging 22-23%. For MFIs, you have the current cap is something like 21.7%. We have banks who are charging at 24% with their cost of funds at 5.5, whereas MFI is having cost of funds of 11%, 12%. It's a very ironic situation. Now, on the other hand, if we look at NBFC MFIs, they are stacked against huge odds. Okay. 85% of their loan portfolio is unsecured. It's a huge credit concentration risk. If anything goes wrong, they are the first ones to face the heat. Yes. And because there is so much of credit concentration risk of unsecured loans, their credit rating is usually lower, and that contributes to their higher cost of funds. So they cannot, lend lower to the ultimate borrowers. Okay. On the other hand, we don't give them any regulatory benefits. Okay. They have to face regulatory restrictions as per the current microfinance regulatory framework. So there is an anomaly in the situation. So we wanted to rectify that.
And so you removed the cap. Fair point.
That's one of the, we have about 20-25 recommendations in that consultative document. Yes. And thereafter we got public comments. We got about 150 comments from 150 stakeholders, about 20-25 comments on each of the recommendations. So, we have taken into account all those things, and probably we'll go forward with that.
Well, that's one part of the discussion, but let's get the counter view from the two microfinance self-regulatory organizations. Mr. Mishra, at the moment, banks are only into retail lending. There isn't that much of demand from corporates. Even at such a time, if the banks are not lowering, will the removal of the cap really make a difference? How do you react, and what would your feedback be?
I think, am I audible? Yeah. I think Sarmaji has covered the historical part of it. But before I answer your question, let me also supplement the answer that Sitharaman ji has given on the pricing part of it. Though pricing is one of the smaller parts of the whole consultative document, it is about lot many other things. But still, because pricing becomes contentious and we are so conscious about pricing, let me also add my thoughts on it, other than what Sitharaman ji has said. One is that there is a hype, like you also said in your question to him, that the rates can become usurious. Okay. Now, my counter question to all the persons who asked me this question is that since 91, the rates were controlled in banking sector. After 91, the rates have been deregulated. Initially loans up to 2 lakhs, and then in 94 everything was open. Have the rates gone up? Or have they moved in tandem with the cost of funds in the economy? They have not become usurious. So why do we expect that the rates in this sector, where 32% of the players are NBFCs, will become usurious? I will only say that what it does is, when you impose caps, what it does is it inhibits innovation. It inhibits geographical spread. Suppose I am capped at 20%. My cost of fund is 12.5%. In 8%, I am not going to lend in far-flung areas of Northeast. I will prefer to lend in urban slums of Delhi, where the density is much higher. Now, coming to your second question, which you asked to me about banks, I don't think, see, all these things will have to be reference benchmark rate will evolve in the market. Since long time we have been seeing NBFC MFIs were the prime movers, or even NGO MFIs were the prime movers of microfinance in the country. But over a period of time, their shares have, as Sharmaji was saying, has come down to 35%. So they are no more the major chunk, but still you will not find any district or any place where NBFC MFI or other MFI is there, but banks are not there, or a place where banks are there but MFIs are not there. Okay. So they are always the first mover. And I think with this liberalization, more innovation will come, and eventually the entire sector will move towards a reference rate, which will be based on cost of funds and risk-based pricing.
Fair point.
So, and I don't agree with all those fears.
Okay. All right. Let me not pin you down. I mean, that was the one that first hit. But Mr. Satish, let me open the, what would be your general reaction to the new framework? There is also an important rule in that only 2 people can lend to a borrower at any point in time. It used to be 2 NBFC MFIs and any number of banks could have lent. Now it is not just 2 NBFC MFIs, only 2 entities can lend to an MFI. And of course, the maximum that you can draw from them would be 50% of their household income. Those restrictions remain. Your general reactions to the Reserve Bank's consultative paper?
No, general reaction I would say is that even going behind the RBI's philosophy in coming out with this consultative paper, if you, Sharmaji mentioned about Bandhan Bank and all. What I can say is that from the time when the sector stabilized 5 years after the Malegaon Committee report, is that time and again RBI, even as a regulator, has affirmed its faith in the sector. When a big MFI has become an universal bank and 6 NBFC MFIs became small finance banks. So whatever Reserve Bank has brought out in the consultative paper is reaffirming its faith that this set of institutions have been doing a good work in terms of financial inclusion. So in that way, I would say that Reserve Bank in a way is reaffirming the financial sector reforms which have started in India in 91 and accelerated in 94. It is again bringing back to that applicability of that to the microfinance sector in terms of what we can say making and giving the institutions which are in the sector more flexibility in operations. But at the same time, there are certain, I would say, some norms in terms of, you are asking the question about the rates. Now, there is a framework which RBI has laid down in the consultative paper as to how each institution has to price its loan based on its cost of funds, based on its idea about its risk absorption capacity, and also the risk absorption capacity of the borrowers. So in a way, though Reserve Bank has removed, proposed, because it has to come as a formal circular, a lot of flexibility has been given. Each item of flexibility is, there is a caveat in terms that there is a framework which the institutions have to follow, and each of that framework has to be approved by the institution, by their board formally, and hard data has to go into that. So I think we should not go with the assumption that it is something like a free for all. RBI, at the same time, when it has given a lot of leeway to the institutions to work, it has also set out some basic norms for each institution, either what is the amount of loan to be given to the borrower. There are limitations to that, and even the fixing of the cost of lending. So, and at the same time, as Alok also was mentioning, that at a point of time, the microfinance interest rates also would come to a what we can say band of rates within which all institutions will lend. And even now, when RBI's upper ceiling is around 21.5%, some of the bigger institutions, they charge 18%, 18.5%. So again, that is depending on their cost of funds. So I think the regulations will enable the sector to innovate, diversify, and probably go beyond microcredit also into other parts of microfinance.
Okay, like microinsurance.
Yes, yes.
Okay. Well, time permitting, we'll discuss that. Rajiv Yadav, let's drag the discussion to the present situation. I was getting some numbers from MFIN in terms of the total growth of loans in the microfinance sector. It's a very impressive growth of 11.9% if you look at it year on year. But that is only because a year ago we saw a steep fall in the gross loan portfolio. Going by the numbers, it was 2.3 lakh crore 2 years ago, pre-COVID, and it's grown to 2.5 lakh crore. So there has been a substantial hit to the loan portfolio. What has been the experience on the ground in terms of recovery? Has recovery of microfinance loans improved? And as well, are you seeing any improvement in the rate of growth of total portfolio?
Sure. Thank you, Lata. For the benefit of everyone, we are one of these beneficiaries of, two phases of RBI regulation changes. One as an NBFC MFI, when the whole sector got regulated, and we have had a long experience of working as an NBFC MFI. And then obviously the regulations on the small finance banks when we converted. So, when I sit here, I am, very much part of this family and fraternity and understand some of the discussion out here. On this, specifically on the COVID phase, we have seen multiple cycles in microfinance. We have seen it once in the D1 phase. AP was still a very strange act, but DMON was still kind of I would still say it was still an elongated event, an event which did not cause significant damage.
Not cause significant damage?
It caused a bit of damage, but not as bad as in AP crisis, which caused 90% damage. This was a 3, 4, 5, 6% damage. And then COVID was a little bit more extension of that. Now, COVID obviously has two critical phases, the COVID 1 phase and the COVID 2 phase. And the impact to the portfolio is very different between the two phases. All of us have never experienced moratorium of 5 months ever. And especially we are worried about a business which is a cash collection model. So people do not pay by monthly installments through their banking. And we were worried that how would the customers react? How would their livelihood get impacted? And to a lot of us surprise, I think moratorium 1 went well. And moratorium 2, which was also probably was seen with some trepidation, actually went well. So when we came out of the COVID 1 phase, a lot of us came with a very clean balance sheet. Customers' track records were intact. Customers' behaviors had got corrected, and we saw a very small impact to the collection efficiencies. The greater impact came in the COVID 2 phase, partly because it impacted health much more. It went deeply rural, and again, that was a very tough phase to manage both medically and by portfolio. But I would say between these two phases, the microfinance industry as a whole has evolved a lot. Our customers evolved a lot. Our collection efficiencies, when you look at Regular customers, what we call non-delinquent customers, they are back into their 99% range. And when we all have a certain delinquent pool. Obviously, a delinquent pool is broken up by various segments. Some have
has
urban.
The delinquent pool stopped increasing?
Yes. The key thing to delinquent pool not increasing is the non-delinquent pool has to go back to 99.X% ratio. So that is the key metric. Once you get there, then you have a bucket of delinquent customers, and you have to just work through them. And in microfinance, you're again seen as a process. You work with the customers, you stabilize them, you start getting one installment at a time, and then they will start paying their installment. They may take 2-3 months longer, but they'll pay. So I would say there is a portfolio loss which is coming in from COVID and COVID-2 cycles. Luckily, no COVID-3 impact, which you all realize. But it is a manageable loss over two years of...
The very pointed thing I would like to know is that whether any further relaxations or regulatory changes, even tweaks are needed to normalize the situation, or you think economic recovery is doing the job?
I think now we are beyond the phase of any regulatory intervention. RBI had come up with a couple of restructuring schemes. There were ECLGS schemes. Now, I think, whatever had to be done has been done sufficiently, or could have been done earlier. But I think in 2022, with a COVID-2 of May 2021, it doesn't need any more regulatory intervention. And depending upon the mix of the portfolios, depending upon geography, there's a lot of geography variable in there. It is not fair to compare institution to institution, somebody with 5% delinquency, somebody with 10 or 15 as a fair comparison, because there is a geography issue in COVID, there is an urban-rural issue in this. So I would say the industry will see a range of losses of 5 to 10 to even slightly higher than 10. But I think the industry is strong enough to sort of navigate that and move forward.
Okay. Well, one final question before I come to the seminal definitions and the bigger story. The small S, like I was telling you, is the regulatory regime which Reserve Bank is looking to change. But the bigger S is deeper financial inclusion, which this panel should give ideas for. And I'm coming to Mamta in a minute on that. But Mr. Mishra, has the longer term CAGR of microfinance growth been severely affected by what we are now almost convinced was a K-shaped recovery? So the people who needed microfinance most have increased and have gotten depleted because of the nature of the recovery, which has gone largely to the upper segments, whether it is because of higher stock market wealth or because of cheaper borrowing that they could avail, and the savings of the poor earned less because of the the interest rate regime. So has the K-shaped recovery maimed the growth of microfinance for the near term?
I would not say it has maimed, but it has definitely halted it, as Rajiv was telling. In the last 2 years, you have seen, as you said, I think the sector, banks, SFBs, NBFC, MFIs all put together, we were somewhere around 2.3 lakh crores in March 20. And we have ended, we will end this year with around 2.5 or 2.55. I'm talking about November figures, March it would be. So it has definitely halted it. In normal times, it would have been somewhere around 3 lakh crores. So it has halted it. But as I was talking to you, let me also say that while we talk about recovery rates and all that, and we can talk about K-shaped thing, because it has definitely impacted the poor persons, especially in some geographical hotspots. But the recovery is coming, and the metrics which you must look at, all the rating persons, all the analysts and all the presenters would look at it, is the client activation ratio. And when I say client activation ratio, what I am meaning is the percentage of clients who are coming back to the center. Even if I have fallen overdue by 7,000 rupees in installment, I am at least paying 500, 700, showing my intent to become regular as my livelihood grows. And that percentage today is 95% plus. That gives me comfort rather than recovery figures of month by month, week by week. Okay. So that means 95% of the clients who were clients of microfinance pre-COVID, through the COVID, are still okay to pay, and they have shown their intent to pay, and they have to be supported by it. Okay. Now in terms of near term, I think touch wood, if the Omicron 3 has had no impact, and hopefully we will have no other COVID impact, I think the scale is much higher, and we have already said that currently the sector reaches 5 crore unique borrowers, all institutions put together. Yes. And when we estimate the demand, there are various cuts available, but even whatever aspirational, whatever conservative cut you apply also, the total market to my mind is somewhere between 25 crores to 30 crores. So we are still a long way off. And one thing which, when you talked about regulatory issues, what more is expected, I always have said that the household income limit, which is part of the consultative document, is 1.6 lakh for rural areas annual income and 2 lakh for urban areas. I think because that is the ceiling. When you put that, you say that any microfinance, if you have to qualify as a loan, has to be within that household income. So I have always argued that increase it to 4 lakh, 5 lakh, because it is the chunk of population, like Finance Minister was telling earlier, the AMRIT KAAL, the micro enterprises, the micro enterprise growth story, or not even micro, the nano enterprise growth story, it starts at the segment whose household income lies somewhere between 3 lakh annual income to 10 lakh, but they're what we call in development discourse as the lost middle. They are neither catered to by the banks, neither the MFIs can go to that. I think raising that limit so that it becomes as the ceiling, within that you can always go lower if you want to have a more poverty-focused outreach. Okay. I think that will be there.
You know, we are coming to the second half of the discussion, and now it's when it's really heating up. Should we redefine microfinance itself? Should the household be just 2 lakh rupees annual income, or should it be more? How accurate are even the income measurements? Because these are largely cash economies, and therefore, you know, one relies on the microfinance worker or the bank employee to come to a judgment. So on that issue, Mamta Kohli, what are your thoughts? Do you think this definition of microfinance itself needs to be increased? While we are discussing re-regulating or rewriting regulations, should that be a consideration? And of course, how do you derive these definitions? Should it be household? Should it be individual?
Yeah, I mean, thanks, Lata, and very interesting conversation. So I think I'm at a somewhat of an advantage. I know the sector, but I'm not so deep into it, so I can look at the good and the bad and the not so good. And I think there are certain things, and we're very positive that these new guidelines are coming because the sector needed that kind of overhauling. You know, as you said, products have matured, the consumers have matured. Our own context, whether it is digital or whether it's paying power, and all has changed. So I think it's coming at the right time. And I think, again, like I said, I mean, the advantage for us is that we know the sector, we also know the granular details and what's happening on the ground and what will really work. So my hope really is that this revamp, this reboot, this microfinance 3.0, when it's talking about greater financial inclusion, looks at 3 things in particular, right? You know, you can't just equate microcredit to financial inclusion. So when you're talking about financial inclusion, you have to give the poor a core set of financial services that all of us are able to access at a rate, at a point, which is, you know, which as easy for us. So I think that's point 1. That
so that would be what? Savings product?
It will be savings, insurance, it should be credit, you know, all of
credit us, they address.
Credit, but the savings and the insurance, and also if you actually want them to make that shift, you need to invest also in their entrepreneurial ability and capability.
Financial literacy.
Yeah, so I think financial literacy, digital literacy, who's funding it? Because if you expect them to make such a leap. So that's one. I mean, how do you make the financial services more inclusive? The second is looking at the client base that you have. You know, how inclusive are you with your clients? So like Alok just said, there is a big chunk, middle missing, that we're completely not addressing. There's also another chunk of very poor that we are not addressing, you know, we are at a stage, because the regulations will allow it, that you can experiment with a product that is viable, that will work for the ultra poor. Till now we've been doing it from a grant base, but it can actually work, you know, you work out a series of payments and whatever, you can create a financially viable model to serve the very poor. And then there is also a whole lot of people.
Do the rules prevent you from doing it?
It's not done. So we're saying, like he was saying, the cost of servicing, the cost of creating, the business model. So we are hoping that this revamp will also help you rethink your business processes.
Fair.
Right?
So welcome that the caps are removed.
Yeah. So the third and another chunk that's completely not addressed or is usually missing is people who don't fill your typical eligibility criteria. Okay. Yeah, we talk about clients and we just forget that clients you're talking about are your well-settled middle-aged women, right? You don't want to go to single women households. You don't want to go to somebody who's disabled. You don't want to go to somebody who may have an alcoholic husband and so on. So there's a whole chunk that we are missing. And we use the word client so often that we just forget that who is our client. We have no that client-centric.
But what can a regulator do about it? Wouldn't this be more the government's job?
No. The regulator puts in measures, business processes that make you more client-centric.
And what would they be?
So they would be like, make sure that the financial and digital literacy is accounted for. Somebody pays for it. Is it the regulator who will pay for it? Who will make sure that the clients understand this one-page sheet that you're going to give her, that this is the new rule, this is how I'm doing it. Who's going to invest in that? Who's going to encourage and incentivize? The regulator can actually make, provide finance at a lower cost or encourage more investment, direct more investment that allows these kind of innovations to happen, right? It's easy to say that we must innovate, but if you don't get the finance for it, so create those incentives within the structure if you can. And I would say the regulator can also, I don't know whether that's really a regulator's job, but we also have a very false divide between SHG and JLG kind of groups.
Okay.
That it's a one seamless pipeline, and like we were hearing earlier in the inaugural panel, the shift is going to be more towards individual lending, right?
So towards individual
lending, right?
And not household lending.
Yeah, so so again, which means investment in revamping your business processes, revamping your regulation, your grievance mechanism, so on and so forth. So that's where the regulator plays a role in supporting the SROs, giving them that kind of also, what's the right word? This is my COVID impact. I always say when I forget that I have brain fog because of COVID, but gives them that authority to actually regulate the sector, to self-regulate the sector, to give them that incentive. So that's what my...
You think the regulator can give incentives for financial literacy, Mr. Satish?
Or finance it, make money for it. I don't know.
Even now, to some extent, it's happening even in, I would say...
By the SROs?
By the SROs, and in practical terms of funding from the regulator himself, because himself or herself, I have to be...
Also SIDBI and NABARD.
Yeah. So, SIDBI and NABARD has a financial inclusion fund. SIDBI has some programs. But fortunately, there was a time, because I myself started my career in Reserve Bank. Reserve Bank would have balked at such suggestions that it should fund or support financial literacy programs. But now, through both Sadhan and MFIN, we are having a program of financial literacy of clients of the microfinance institutions. Of course, we received a setback because of COVID. The physical part of that we are not able to do. But many of the MFIs themselves have been made eligible by NABARD to access some funding under their financial inclusion fund. Okay. But I would say that as far as a microfinance institution is concerned, the message of or the hand-holding or capacity building of financial literacy is a part of the business activity of the MFI.
MFI, yes.
When the credit officer goes. So that's why always we feel when we interact with our member institutions that your people should spend more time at the field level in interaction with the borrowers rather than just complete their financial transactions and get back. So
you must have more Bridge Mohans perhaps.
Yeah. More Bridge Mohan, and more of the some of the institutions have their programs which were in a digital form, in a printed form, in an oral form. This financial literacy message goes, and if you look at even the some of the introductory paragraphs of the consultative document, there is a lot of stress on the principles of client protection and client support. Okay. I think from that's where the entire thing focuses.
Fair point. Now, I think we have to push it back on the regulator to answer some of the questions raised. Sir, since the mandate of the session itself is how do you expand financial inclusion, there is a concrete suggestion coming about this 2 lakh rupee limit, and also a suggestion that there is a missing middle. Nobody is servicing probably the 3 lakh to 10 lakh household category. Any rethinking on that in terms of expanding the definition of microfinance? And a second, okay, I'll come to the second question in a minute.
First, let's talk about the household limit cap. We got that suggestion from a lot of stakeholders, and we are considering that.
Okay.
We think we should move to probably 3 lakhs or 3.5 lakhs. Let's see. I mean, we are not against it. That was the first question. Second question about how to improve the financial inclusion. I mean, it's an ongoing process. You know, we know that. But two things which come to my mind, which can push financial inclusion very quickly. One, we can onboard GST and on account aggregator system. Yes. That's under process. In fact, we had a meeting with the DOR, the Department of Regulation, about 10-15 days. So probably that should go through quite quickly.
But that would be for higher ticket loans.
No, anybody.
Okay.
You know, anybody who doesn't have a credit history, they can give their invoices from the GST and, you know, based on the cash flows, they'll get the credit. So it's a very good tool. So that's one thing. The second thing which I think should happen is that, you know, at least the bigger MFIs, they should partner with the fintech companies. Now, a lot of banks are doing that, but probably there is a case for MFIs, tying up with fintechs. Okay. That could work. But the GST and on account aggregator, I think that's going to be a game changer, at least for micro.
For MSMEs and SMEs. Yes. Fair point. Mamta, you wanted to add to this?
Yeah, I just wanted to add on the household definitions. I mean, in today's world and what we've seen, this rural-urban is also a bit of complex. You know, how do you define rural? How do you urban? I'm sure you must have received.
That also is going to be must.
Yeah, so that will be good. I mean, you have received a lot of feedback from, so it will be good to add that.
So there should be a single household income limit. We should not be having rural income and urban income. No, there are reasons to have a single cap.
Fair point. In fact, a lot of FMCG companies were telling us that they're seeing a substantial amount of growth in rural, as they call it, tier 4, tier 5, tier 6 cities showing more growth, and therefore perhaps the definition could be changed or done away with. The final, or rather the big frontier for the expansion of financial inclusion lies with digital. At least we are given a lot of hope because of the AMRIT and the India stack, telling us that digital footprint can be used for greater lending. Mr. Mishra, your thoughts on that? And I will come to Rajiv as well. Do you really see that digital footprint can be used, or is that actually only from the smartphone level, where people will be transacting on the phone, and that's not really the feature phone level, where we don't see so much? I mean, to be sure, MPCI is doing a great job of allowing transactions even at the feature phone level, but I don't know if transactions are happening. So really, is digital just a dream, or is digital footprint genuinely in a stage where you can expand lending?
Thanks. I knew that this question will come because digital is the hot word, and I would
it's also a big hope. Yeah, so are we living in?
And I would say that I would not say it is hope. It is already happening, and much has happened. So let me give you concrete examples from the microfinance sector, and that includes all banks you talked about, SFBs you talked about, NBFC, MFIs also. So 99% of the disbursements in microfinance now go into bank accounts. So that's digital. Now the 99% of loan disbursements go into the bank account riding on the JAM Trinity. So that becomes totally digital.
Yes.
Now on the usage part of it, when the client takes out the money, we are also trying to, the SIDBI chairman is here, he has been taking a lead part in that how do we now see that the client also uses the money digitally? Because that will be the digital system we are doing, and that will also enable a multitude of digital footprints which the institutions can later on capture and incorporate in part of their credit underwriting. So that project is the next frontier which we are trying to do, and a lot of innovations, as Sarvaji was talking about, account aggregators happening. But account aggregator will get you data from pension funds, mutual funds, insurance companies and bank account statements. So in case of microfinance clients at present, basically the bank statement data is what will come to use in credit underwriting. There also our experience, my experience of the field has been that the average balance ranges from 500 to 2,000 rupees. That will not give you the comfort of underwriting a 30,000 loan also.
No.
So what needs to be done is to promote the digital cashless ecosystem at the ground level so that the clients feel convinced to use it. Systems are available. You go to rural areas in India, we talk about digital, and you go to an RRB, and the RRB is not even hooked into the NPCI's UPI system because they don't know that each branch has to have a handle and registration with the UPI. So once we promote that ecosystem at the ground level where clients' money is already coming digital, she gets comfortable using it digitally, you will have a digital trail and that will be used in credit underwriting. Enough innovations have been done and that will be the next stage of the digital footprint.
Okay. Well, actually, if I go to a very anecdotal example of my maid and her 3 children, they should be a family of easily 50,000 rupees a month. I don't think they spend anything digitally. They earn everything digitally.
Yeah.
I mean, even the salary I pay her, 1,000 of the 5,000 is, put into her bank account. The rest is cash. But the expenditure is entirely cash, sir. So I don't know how much of digital footprint is left behind by someone who is earning actually a 6 lakh rupee household. I'm not very sure.
No, that's what I'm saying. That we have to devise ways to see that it becomes it. Right now you will get patchy, you might even get data dark spots.
Okay.
In majority of the clients, you won't have anything. We talk about alternative credit scoring and all that, it will not work. You have to promote it at the ground level, then the digital
Rajiv, in a small finance bank, do you think this digital dream is real and that the digital footprint can be used to expand financial inclusion?
I would say unequivocally it's a reality. It is happening and it will happen big time 5 years forward. What we saw, how we used to do microfinance business and not just disbursing money into accounts, and how we used to do business even in the big cities, 5 years back we were virtually a very paper-driven process. And the first revolution that has happened in microfinance is not the fact that customers have adopted digital, but all institutions have adopted digital technologies and they source customers in a paperless manner through smartphones or tablets, and that is made, and through eKYC wherever they are permitted to do, and that has made a phenomenal difference to our borrower's life. And I'm saying going back just 5 years, and this JAM revolution is the basis of that. And so I think that it's a sea change in the last 5 years. As a bank, we open 100% accounts of microfinance customers. We give them a debit card. We disburse into the account to Alok's point, but they use the debit cards. As a bank, we link DBT of our customers to our bank accounts. And we have a penetration of about 25-30% of the accounts linked to DBTs. In this COVID phase, we have seen crores and crores of rupees flowing into those accounts every month and being withdrawn by the customers using debit cards, because that's the way it works. It's all digital. Now, on the other side, where the digital is making a big impact, we all know it, but we have to just triangulate it together, is the UPI element of it. UPI element has not reached the villages to our borrowers. To Alok's point, they're not getting their money in digitally, so they cannot spend digitally. So therefore, the problem is, how do they get the money? But now imagine a small shop, and I'm sure you have hundreds of examples like that, because I have experienced hundreds of them. You know, a small person selling coconuts on a street corner somewhere is willing to put a QR code up there to accept money digitally. I have been on a vacation to a very small place in the country, and I was saying, does UPI work? It'll always work, but does a guy accept money with QR codes? I was surprised for him to even show me a QR code. We could get away by paying 20 rupees, 50 rupees on QR codes. Now, where digital transactions are happening are in the micro SME segment, the retail segment. And whether it's a small guy or a big guy, in almost all the top tiers, tier 1, tier 2, tier 3, tier 4, it's happening. I'm not sure about tier 5, tier 6. So the retail segment is getting fully digitized. Okay. If you're in that business, your money is coming to bank accounts. We see so many of our SME loan borrowers. Today, their accounts are rich with transactions. Absolutely. It's amazing. The same thing would not have been the case 5 years back, because they were happy to take it in cash and give away in cash and effectively not pay some taxes also. Thanks to GST, thanks to UPI, their banks are full of transaction detail. Okay. It's not gone to the village, but it'll go there somewhere.
Fair point. Well, I just want to warn the participants that we started off the meter about 25 minutes late. I wouldn't want to snatch time from the subsequent panels. So last word, ma'am.
Just the last word is that yes, we've seen digital work even in very remote parts, and women are very comfortable with digital once you spend enough time to make them understand what to do, how to do. Their phones may be the oldest phone and the worst phone of the family, or they may not even have. So that's again something to look at. And again, regulation is important from a different point of view as to how do you get cheap phones, enabled phones. That's one story. But we have seen the example of banking correspondence. So banks, they do transactions worth lakhs in a day, and it's all digital. And through COVID, they were doing this, and that actually helped build a more acceptance for digital transactions as well. Because the overall environment doesn't allow you to do only digital, we tried to do this experiment in a couple of villages to see how it will work. It's not possible, so we need to get each point down. But there is, we need to invest in digital literacy, making products, services that women, I say women because let's not forget, 99% of our clients are women. So let's say, they need to understand and they need to have access to those phones that help.
Well, from the last word, from a reporter point of view, sir, when are the new regulations coming?
Yeah, when are they coming? I wanted to ask that.
Anytime. And is there a chance that the 2 lakh limit could also be raised, since that seems to be...
It's very, very likely.
Likely.
Highly likely. Yeah.
I think that's a very big point that we are getting. Yes. Yes.
You asked about the institution for taking care of 3 to 10 lakh. I think the best institution is my neighbor. So small finance banks, I think that's what the Reserve Bank had in mind, to take care of the missing middle. I think we just have about a dozen of them, roughly or so. I would say that we would require scores of small finance banks in the country.
I think that's a round of applause both to the regulator and the small finance bank over here. That has led to the expansion of credit. But I would ultimately take the point that Mamta is making in several ways. It is development that's, when we were taught family planning as part of economic growth, development is the best contraceptive, we've always told. And that led to the tapering of population numbers as people grew. Likewise, as more people pay electricity bills and more people pay gas bills, you are going to have more bank accounts, and hopefully, therefore, basis that data, we should be able to expand microcredit. And the regulator is doing his bit by increasing the limit. But we have to give him credit. I mean, if you expand the credit to 10 lakh, chances are that only people from income 3 lakh to 10 lakh will get loans, and the 1 to 2 lakh will get ignored. So perhaps we should tread slowly and softly in expanding those limits as well. Gentlemen, thank you very much for some concrete ideas to increase the world of microfinance. Thank you very much.
I request the panelists to please stay with us for felicitations. Thank you very much. I think that was a wonderful discussion there. Thank you to the panelists for all their noteworthy points and suggestions as to how we can achieve greater financial inclusion. I'd like to invite Mr. Arup Kumar, Chief General Manager, SIDBI, to kindly join us on stage and felicitate our eminent panelists. Can we please have the felicitations in order? Can we have the flowers come on stage? Let's start with our moderator there, Ms. Lata Venkatesh, Executive Editor, CNBC TV 18. Can we have a big round of applause, ladies and gentlemen? Shri J.P. Sharma, Chief General Manager, Department of Regulation, Reserve Bank of India. Ladies and gentlemen, a big round of applause. Sir, please present to, let's have that picture first. Dr. Alok Mishra, Chief Executive Officer and Director, Microfinance Institutions Network. Let's have a big round of applause. Then, may I request you, sir, to give it to Dr. P. Satish, Executive Director, Sadhan. Let's have a big round of applause, please, ladies and gentlemen. And Ms. Mamta Kohli, Senior Social Development Advisor, Foreign Commonwealth and Development Office. Let's have a big round of applause. And of course, Shri Rajiv Yadav, Managing Director and Chief Executive Officer, FinCare, Small Finance Bank. Can we have a loud round of applause for all our eminent panelists? Shri Arup, may I request you to stay with us for the group photograph with all of them. The photographer certainly needs a group picture. If you could just stand close to each other, ladies and gentlemen. There we are. Let's hear it once again. Thank you very much once again. Thank you. So what do I say at the end of that session, ladies and gentlemen? It was highly, highly informative, touching on the key parameters, household income, customer centricity, and how to look at missing middle segment. We're going to be resetting the days now, ladies and gentlemen, for the next session. So as I was saying, how to look at missing middle segment, where indeed, there is a gap of lenders catering to. So, in fact, the theme of this Congress is micro enterprise finance, which encompasses the entire gamut of credit for enlarging the financial inclusion landscape in the country. And there are so many takeaways that I'm going to share with you, but the lights are down, ladies and gentlemen, only because we're resetting the days, so don't go away anywhere. We're just resetting the days for the next panel. But I do have to say,
the deep secrets of life is that all that is really worth doing is what we do for others. Perhaps a little old-fashioned, but true and timeless nevertheless. The microfinance sector in India is fortunate to have seen a few stalwarts who embodied this in letter and spirit. And today, we are honoring one amongst them, present with us here, our beloved Shri Brij Mohanji. Shri Brij Mohanji has relentlessly worked for financial inclusion in India. He has introduced India to the microfinance sector.
Small people taking up economic projects, we felt that there is no way they can get money unless there is a client-friendly arrangement. So that made us start thinking in terms of, some micro-enterprise funding arrangement. And instead of setting ourselves, we thought, can we use our relationship with NGOs to make a beginning of giving small loans? That's how it started.
We may come across one such visionary once in a lifetime. He has always been revolutionary in his ideas and seeded the microfinance ecosystem, cajoled the NGOs to seize the opportunity. His vision and the program he formulated under SIDBI Foundation for Microcredit, SFMC, heralded the evolution of NGO MFIs, which have since grown and prospered.
It's just the start of the whole effort. See, I have been involved in development sector for 30 years. All these years, what we were thinking was development means aid, development means grant, development means low cost. But it's a new idea that as long as there is something which poor need, and you can always build a revenue model. So I see a lot of prospect. If really Bharat and India has to merge, social entrepreneurship can lead the way.
In his lustrous career as the SIDBI's Executive Director, Shri Brij Mohanji has developed and mentored generations of microfinance professionals, not only at SIDBI but across the sector. As the microfinance fraternity, it is our privilege to have the continued energetic support of Shri Brij Mohanji for over the last 25 years.
Ladies and gentlemen, okay, let's have a big round of applause once again. We know that Brij Mohanji was honored this morning in the inaugural session. So moving ahead, it's really now time for our second panel discussion, themed Scaling Up Individual Lending, Does It Suit the Microfinance DNA? And this panel will discuss enterprise versus individual lending by microfinance providers and facilitators and their scaling up. To moderate this discussion, I'd like to invite Shri Tamal Bandyopadhyay, Consulting Editor, Business Standard, ladies and gentlemen, on stage. Let's welcome him on stage with a big round of applause. And he's also welcoming his panelists, Shri Bala Murugan D, IAS Chief Executive Officer and State Mission Director, Bihar Rural Livelihoods Promotion Society, Jivika. And Shri Mukul Jaiswal, Managing Director, Cashpore Microcredit, one of the oldest microfinance organizations in India. Shri Uday Kumar Hebbar, Managing Director and Chief Executive Officer, Credit Access Grameen Limited, one of the largest MFIs in the country. Shri Naveen Chandani, Managing Director and Chief Executive Officer, CRIF Highmark Credit Information Services. Shri Naveen, of course, has keen insights on credit sector with focus on low-income segment. We have Shri Sivakumar BS, President and Business Head, Agri Finance, Kotak Mahindra Bank, who has developed innovative finance products for the informal sector. So they're all here, ladies and gentlemen. Let's get our hands together in a loud round of applause for our eminent panelists. And with that, now I'm going to request our moderator, Shri Tamal Bandyopadhyay, to kindly take over the proceedings.
Thank you. Very warm welcome to the second session. And I must say that it's a very progressive approach by SIDBI, which is sync with what Finance Minister had spoken in the beginning, that SIDBI should think innovatively in different ways. And I think this is one, scaling up individual lending. Does it suit the microfinance DNA? I think it's a very timely discussion. And also it's a the combination of people they have organized from every sector, from banker, from persons who are into data and credit rating in some sense, and microfinance, a listed entity. So welcome all of you. Just about 1 hour we have time. If there is any question, because initially I was told that there will be audience interaction also. So if it permits, we will not wait till the end, but in between, if without disturbing the flow, if there is any question, so please keep the microphone ready if any relevant question. No comment, please, just a question. So much of it has been covered in the first session itself, how microfinance evolved between 2010, the Andhra crisis, until recently the Assam crisis. RBI representative also spoke about a very, very interesting thing. If you see that microfinance industry has grown both in terms of number of people, the beneficiaries, as well as the quantum of money given, but you see the microfinance entities share is coming down. Banks are playing a bigger role there. So, I mean, in that sense, do you what? Do you create some kind of mid-finance entities instead of microfinance entities to do that? I don't know. All these kind of questions are there. And if you talk about giving them more loans already been given. It's been given because if you see the microfinance, you can't give more than 2 entities, but the banks were there. Their doors were always open. Now it's another matter, some of the banks misused and get into over-leveraging them and all. But actually they are getting more loan. All these 2 lakhs and 3 lakhs, they're all theoretical stuff. But reality, if you travel Assam and in other parts of it, it's very different. How do they assess their income and how much money each of them given is very, very different. And finally, I think there is a time also to look at and redefine what is unsecured loan. I mean, because you don't have any collateral that does not mean if you keep a tab on the cash flow and you know what this gentleman is doing, this entity is doing. Sorry, gentlemen, I said because microfinance is dominated by women. It doesn't make much sense. I mean, there's not much of difference between unsecured and secured loans. I think the industry also needs to teach the investor that, because investors always look at you as said, oh, so much of unsecured loan, but a bulk of it is not secured if you can do that, track their cash flow, etc. So come to the point. Excuse my pronunciation. I was trying to wrap it right now on my mobile. It's something called deoxyribonucleic acid, that is DNA. Okay. I mean, if there's any person with medical history, excuse me, I'm not pronouncing in the correct way. But what is this? What is this particular acid? It's a chemical in the cells of an animal or plant that controls what characterizes that particular animal or plant. Now, Brijmohan Saab is here. He is a sort of guru of microfinance. And if we talk about from the 90s, last 30 years, microfinance, this particular, I'm not trying to pronounce it again, the DNA has been the group lending model. There is no legal basis, to the best of my understanding. It's the social pressure. That's what that is what. It's not that A, B, C, D, E, F, G, H. If A defaults, B, C, D's can be held responsible. But it's a social credit. It's a stigma that why that is one part, and second part, if he's really is in trouble, somebody is in hospital or children's education, then B, C, D, E, for the time being, help them out. That's the two things in Bangladesh and in India. That's what happened. Now, is it a time to break away and get into the next level, the so-called missing middle, and give them money? I don't want to impose anything from my side. We'll conclude and we'll hear them, and then probably we find out a conclusion. We'll start with a gentleman who is, you are not an odd person, but you are in the microfinance. I'm talking about person representing Kotak, the banker. You tell us that, because, again, an RBI has done a wonderful job, because they are now, regulator is looking at microfinance as a concept, not through entities. So whoever gives that particular loan need to follow certain norms and certain norms. So that kind of the bank's backdoor entry and encouraging over leveraging and creating problem, that will stop. That's the one part of it. And second part of it, of course, it says that interest rate is free. So even in the same locality, A, B, C, D, E, F, G, H, all the women or men do not need to be treated same way. Their credit rating important, and you will come into that. How do we do this? So start with Kotak.
Yeah. Thank you.
Use the mic, please.
Thank you. If I were to look at the microfinance as an activity, it has, it's clearly defined by the fact that you're lending, there is a joint liability group, which is the primary requirement. And in India so far, it's almost entirely done to women. So the women are the borrowers to it. So that itself sets a limit in terms of how much microfinance can be done. And for a microfinance company, since the topic over here is about group lending, therefore, if you're talking about group lending, it has its own limitations in that even today, as the ticket sizes of the loans are growing up, will the group be able to support each other's requirements, and will they be able to, like tomorrow if it's a 4 lakh loan, will the group be able to support the 4 lakh loan liability which is there? To a large extent, as of now, nobody's complained, but the tenure has remained 2 years. So while the loan sizes have been growing up and the frequency has been reduced, therefore, each installment for the loan has itself increased substantially, therefore, whether the group will be able to handle that. Second thing is that since it's going to be women, if you were to look at the data of what is the amount of women's borrowing power in the overall family debt, we'll also have to factor it. Because if you're going to be using women only as the route through this joint liability model for lending, can the woman be the point for handling the entire debt of the family? So today, yes, it is rather strange. We need to that while there is the lady has been able to handle the loan portfolio that she is handling very well. Why is it that microfinance never tried to do that for women or for men, or there not been men as part of the joint liability groups, or why have men not even been co-borrowers in this whole piece? So there is it's not as simple as we make it out. The second thing which I would like to say about microfinance entities is, obviously, I don't think it's going to be a very comforting situation where to say that there is a microfinance company which will have a 1 lakh crore portfolio. It's probably being an unsecured sort of a thing, uncollateralized, let me put it. can an institution handle so much of a portfolio quite diligently? I want to question that aspect, and therefore it is necessary that microfinance will have to move into activities or other, increase their ticket size, increase the tenure of the loans. Because other than microfinance, when I say microfinance, I'm also taking the liberty of all the institutions, which is SFBs as well as banks who are in this space, because the loan ticket size between this the less than 1 lakh to let's say 5 lakhs, I would call it as micro for now for the discussion. It's not just, there is nobody else who is doing it effectively, and the microfinance companies have managed to do this rather very admirably. But the credit structures which currently have been put in place is more operational and not analytical. So it is necessary for the microfinance companies to develop additional models or products whereby they will be able to go beyond just the group lending. So from my perspective, therefore, the DNA that you spoke about, it is going to be a challenge, and the challenge has to be taken by the microfinance institutions in terms of looking at credit from a different perspective. And in that, probably, I won't say today there is expertise even at the bank level, because the banks also suffer from the concept that because they are slush with funds, the moment they start an activity, they immediately their lending numericals are in crores. So for them to also come down to the size and start lending to segments where the loan size is up to 5 lakhs, there's going to be, that's something which everybody has to look at. So for this topic which we have got in this discussion, microfinance companies will have to alter their DNA. It's not going to be possible, and assuming that you will be able to do this joint liability groups for too much. There is also a challenge on the technology front. For instance, the joint liability book group was based on a method of all cash transactions. We have managed to now do the credit into the lady's savings bank account. But the second challenge is in terms of how the collections are done. And once collections also go on the digital way, there is no group. Okay, the money is going to the lady directly, and she is paying from her own resources. So there is no concept of the group coming into the picture. So all in all, there is no doubt about the fact that the DNA has to change. And the faster they start looking into it, and they are the best players to do this job.
Thanks, Shivkumar. So you are saying DNA needs to change, but it's a challenge. How do you do it? Right?
It is a challenge.
It's
it
a
has
challenge
to be done.
we need to. Yeah.
Yes.
So we'll ask someone else. Yeah, because something also called evolution, no? And the milieu has changed over the last 30 years. Indian economy has changed. Business models have changed. And we were also once upon a time on monkeys, and we had tails, you and me. We also changed, right? So once the milieu changed, the environment changed, everything needs to change. So I'll ask Kashpur, Mukul, because you are very tech savvy. That's what I hear. I don't have that kind of interaction with you or with your company. But from the industry, we see that in terms of collections and all, when it comes to using technology, you are far ahead of others, or if not far, you are ahead of others. So tell us, how do you see, because, and everybody spoke about even the first thing, that technology needs to be an enabler of doing this. So how do we break away from the group concept? That's point number one. Point number two is this: does microfinance need to associate itself only with women continuously, or there is time to welcome men also in that? I'm not any gender bias, but for as a changes and all. And how does technology come in the picture? Few minutes.
Yeah. Thanks, Tamal.
Use the mic.
I would like to say that Caspar had welcomed male members of the family long back when we started making them as co-borrowers. So the first borrower or main borrower is women, and the husband or spouses are the co-borrowers. So there is no gender bias for us. And what we have experienced is that though the loan is given to women and it empowers women and it is used by the women, but it is not only used by the women, it goes into the household enterprise. And that household enterprise can be managed not only by the women, but every other member of the household has a role to play in that. Okay? For example, if there is a small kirana shop, it's not that only the women member would lead it. Okay? So she'll be there, her son will be there, her husband may be there. Okay? Similarly, any other animal husbandry, if there is a cow, buffalo, it's not that it would be only women who will be taking care of the animal. So, and for me, I see the very reason for women on the, when microfinance started, was that they were more trustworthy, okay, nice. And it was evolved through experience of Grameen Bank and other MFIs. And individual loans and using technology in moving towards from joint liability to individual loan mechanism is a very natural progression, I would say so. And use of technology is very important for that. I remember after there was lockdown, we had started, even before lockdown, we were experimenting with the UPI, and we were enabling our borrowers, our beneficiaries, to use more and more UPIs. Okay? And we were actually putting in incentives for them in terms of interest rate reductions and other things to enable them, to attract them for using more and more UPIs. And we have realized that there are large number of women, roughly around 35–40% households to which they belong. They have at least one smartphone in the family, and they have a, thanks, it was mentioned in the previous panel meeting, JAM platform. So because of that, they had access to bank accounts, they had access to mobile phone and UPI. So we have been increasingly using UPI platform, though it's difficult, it will take time, but maybe in next 4 to 5 years, I see that large number of our beneficiaries using UPI model to enable their repayments directly from their bank account to our account. We, as you mentioned, we were technology savvy, we were the first microfinance institution to understand the power of smartphones, okay, and the power of mobile phones. And we were the first MFI to automate our microfinance operations using Nokia feature phone way back in 2011.
No, but Mukul, you are not answering the question. Yeah. That's fine, you are tech savvy, as I said, before you I announced it. Yeah. Is it the time to break away from JLG and get into individual lending, and there you think your technology will help, or how does it, how does it?
I got you,
quickly,
I got you.
Quickly.
So just to answer keep me brief, I would not say break away. I would say natural progression. We have clients or beneficiaries who have been with us for many years. Let's say Casper has completed more than 2 decades. Right. We have large number of clients who have matured and whose credit need have exceeded even the maximum limit which has been put up by the RBI as 1,25,000. Okay. And we have been using like other mechanisms, for example, partnership with the SIDBI under Prayas scheme. So the time is that we actually transform ourselves and satisfy their credit needs, okay, and help them to grow their livelihood enterprises into micro enterprises. But that's not true for all microfinance, all our beneficiaries. This is more for graduated beneficiaries who may be 10, 20, 30% of our beneficiaries.
I think SIDBI's the product Prayas also aiming at that, the people who have gone to the second level.
In fact, I would say that has helped us because being a not-for-profit company, we have a limitation. Maximum loan size we can disburse is 50,000 rupees as against to NBFC MFI.
Sure.
We work as a BC, but BC Bank allows us to disburse loans up to 1,25,000.
So let's hear somebody who is not in that sense part of the industry. This gentleman, Bala Murugan. Bihar Rural Livelihood Promotion Society. So you have a field experience, right? And I must say that I have not done my homework. I don't know about your organization. My apology for that. So tell us from the field, what do you see? Is it the time? I mean, call it breakaway or call it evolution, but Is it the right approach what SIDBI is saying that, look, we have been doing JLG and this, but now this is the time, at least selectively or going to the next stage, from your experience in Bihar, and Bihar does not have any bad history in some states. I'm not talking about Assam, but in many other states also, in the run-up to the elections, we find a whole lot of issues. I don't want to name those states, but Bihar is one area I don't get to hear much negative part in terms of when it comes to collection, people becoming a defaulters and all. So tell us from your experience, from the field, your organization, what do you see?
Can I use the podium?
No, sir, it'll be, I mean, you want to do that? Otherwise, it'll be better, no? Whichever. Okay.
It will be easy for me to.
Achha, no presentation, right?
So there's a presentation.
No, we're just talking.
Okay, fine.
Talking.
I'll use a podium.
Yeah, talking. 5 minutes, just talk.
Oh, sorry. It's very important to.
No, we are not getting into any presentation. Just making it a very casual conversation.
In fact, as you said.
Yeah, please.
First of all, thank you, SIDBI, for giving this opportunity. Maybe this is the first time SRLM getting an opportunity to make a presentation before this kind of audience. Particularly, as you said, it is very important for me to explain about the institution from, I'm coming to set up the context. I head SRLM, State Rural Livelihood Mission. You have a national program called National Rural Livelihood Mission. In Bihar, we started this program in 2007 just to make audience to understand the importance of this platform and the scale at which operate. We have 10 million households, more than 10 million. To be exactly 12.7 million households, 1 million SSGs. And you have a SSG platform is basically 3-tier structure: SSG, village organization, and cluster level federation. You have specific groups called producer groups and producer companies. Why am I saying all these things? I agree with my fellow panelist when he said we need a graduated approach. I take this question and I want to say emphatic yes for this question. Scaling up individual lending, does it suit microfinance DNA? I would say a big yes, because this platform representing SRLM is having a huge potential. Why I'm saying this? For already it is happening. You are lending it to individuals through these SSGs. Initially, the SSG gets 1,50,000 as a loan, first linkage, and then they get 3 lakhs, and then third dose even close to 8 lakh rupees. All these 8 lakh rupees, it's based on the micro plan. They prepare a business plan approach based on the individual's requirements. Initial loaning, all this, most of the loan goes for consumption purposes. And then they start taking loans for starting small enterprises. When we say enterprises, it's not only big, investing 10 lakhs, 15 lakhs. We are talking about inclusivity. So we need to take care of the credit requirements of small enterprises also. That's where the platform like microfinance institutions, particularly SRLM and JLC, becomes very important. This platform having a very important role to play. And when we, right now doing SSG lending, and we can always take this to next level by focusing, creating more products. Right now, we don't have a specific product using this platform for housing requirements. You have a huge demand. You have a Prime Minister Rural Housing Program. It's a big program, but small repairs and other things, they don't have access to these kind of products. Institutional lending, and for starting small enterprises. Again, this platform becomes very important to create awareness, because I'm talking about a Bihar from field perspective. When you go to a rural area, it's not that starting enterprises only belongs to urban area. They have innate ability, rural women, so we need to assist them. How to assist them? We don't have knowledge. After heading 6 years this SRLM, working with bankers, if I'm not in this system, if I want to approach bank, it is very difficult for me to approach bank, because that is the kind of knowledge you have to have, patience you have. This platform is providing that kind of facilitation services for SSG members to aware, to get knowledge about the products,
and also to get capacity building. And one more thing, I'll list out 10 important things this platform provides. Particularly awareness, and then creating knowledge about the products, then only they can have access. Otherwise you can create 1,000 products, but it will not reach the needy people. So this platform comes very handy creating awareness. Second, document preparation and business plan and other aspects. This platform providing opportunity, and then you can create resource pool within this platform, community resource person, within the community they come, and the cost, efficiency also goes up. We have programs, we have a startup village entrepreneurship program. Already we are supporting 25,000 people through the entrepreneurs. And you have we have a problem in lending because they don't have transactional history, poor books of record. This platform again provides opportunity for giving training, and these thousands of lakhs of SHG women, the poor households, are getting benefited from this. Again, this is the reason this platform is very important. Even when we move from microfinancing, this 1,50,000, 2 lakh, 3 lakh loans to SHGs to individual loans. And also this is a time to move from SHG lending to higher order institutions. We have village organization, we have cluster level federations, we have producer groups, we have producer companies. Lending to them is also very helpful. Why it is very important? Because even after starting enterprises, they have problem in accessing technology. Formalizing these enterprises, where they get knowledge, this platform provides opportunity for them.
So Bala, from your experience, I'm sorry because of there's a time constraint and we are running ready. So would you recommend this? Absolutely. Like, would you say for the entire industry that should be followed? And you'll have enough time over dinner to discuss about the organization, what you do. So I'm just saying the last, one sentence, that would you recommend this is the time to evolve, not dismantling the JLG group? JLG should remain, but you need another tier and where higher loans to individuals to be given.
Absolutely, very strong recommendation and suggestion from SRLM side. We need to graduate, there's no need to break away or dismantle. This platform proved, and I would like to end by saying this, that right now also the repayment rate is more than 99% even during COVID time, last 2 years. That's the kind of transaction history they've proven themselves.
Excellent.
So we should use
that,
the platform.
that should be a music to the ears of SIDBI Chairman Raman sitting here. Okay. We have two, Udaya and our man. I'll keep you to the last person. You tell us, because you are a listed entity and you are doing that. And I'm just only also one dimension, if you say. One is, of course, how do we upgrade and how do we evolve. Second is, everybody talks about technology. But I don't know, because of my age or whatever it is, I personally feel that it has to be taken touch, because personally, at least technology can be in terms of transactions, but for credit appraisal, unless you visit, unless you know how many cups of tea this gentleman sells, or how many cows this gentleman have, or how many goats this lady is rearing, and whether she is lying and showing the neighbor's property or her property. So it's a, it can't be a one-off deal, just one visit. So it has to be taken touch continuously. Tech can come at the level 2. But touch has to be there at the appraisal level. I might be completely incorrect, but from your experience, tell us, if we need to upgrade and evolve, what are the key lessons? Being a listed entity, you are always under the watch of your investors and you need to perform. So tell us.
Thank you, sir. Microfinance has been in India for last 25-30 years, thanks to Braj Mohan ji fathering it for the country. Build the DNA, which is today. I think DNA will remain. DNA will remain. I don't think DNA need to change. What need to change is the way of delivering is to change. And that is what we are talking about. Microfinance or delivering to rural or the underprivileged is a suitability, product suitability. We need to keep following the customers. Actually, the customers keep moving from income generation loan to asset creation to building houses, creating industry, and becoming entrepreneur. So I think all our job is to keep following their needs, create the suitable products. That the journey continues to happen. That is why in that journey, individual loan become one imperative component. So I think the graduation need to go through the individual loan. But I think, there will be a difficulty if we follow and make individual loan and unsecured loan. Then again, it will become again a concentration of unsecured loan, which will be a challenge. If you want to move to asset or asset backed to secured loan, then whether two-wheeler or a house or affordable LAP, everything, you need to invest a lot on technology. Technology stack in terms of loan origination system or appraisal system, expert management, expert team, separate everything separate. Actually, you can't, the microfinance team cannot do this work. So then you need to invest a lot. If you want to invest for all of us in the microfinance system, then you need to have enough headroom. Today, the headroom is only 15% or 15% of the balance sheet assets, which will be a challenge to create a huge tech investment or a manpower investment or an infrastructure investment to do this business. So that is, we need to think from a regulatory side also, whether this 85% qualified asset and for an individual or unsecured loans and 15%, maybe we need to relook that part also. Otherwise, it will be difficult for an institution to invest heavily on everything, to build the infrastructure to make the individual secured loan or enterprises loan as a big within NBFC MFIs. So we need to think about that. And the other one is, the appraisal system itself. For you talked about technology. Technology is very important to build the individual loan side. Even microfinance said yes. Microfinance has to be a high touch. High tech is to originate, to disperse, to process, to collect the transaction, making online, improving the speed, improving the service. Whereas high touch is important to collect the money. This is collecting business. It's not lending business actually. We need to go to the right time on the right day to collect the right money. So then it becomes the high touch as well as high tech. High tech will improve the efficiency. High touch will improve the relationship, which will ensure the collection and the on-time collections. So high touch will improve the relationship. High touch will improve the high trust. Then again, it's a relatively, that is the asset actually in the 85% of the business. What unsecured what you do, it is actually the trust is the asset. Trust comes by touch actually. So I think touch will not go. That is why DNA should not change in this business. Otherwise, it will be difficult because if you continue to increase the loan size, individual loan, but remove the touch, then we'll have a challenge.
Udaya, you are listed in it. That's why I'm curious to know that is the entire architecture of your company is JLG or you do individual? You do give individual loans.
We do individual.
And what kind of size and who are they?
We do individual loan for the graduate customer. We actually right now we are not doing for the outside the company. Captive customers who becomes a graduate, so who are more than. That's what we follow the customers.
And what's the size
it goes
of the
all
loan?
the way up to 10 lakh rupees. Okay. All the way up to 10 lakh rupees. Okay. And basically for the customers who have a stable cash flow and stable business. Okay. These two are the key for them. So with these two available, so we are okay to go and provide them to support them to becoming entrepreneurs.
And in percentage term, what would be your JLG number of customers wise and also in terms of total assets, JLG versus individual customers?
We have about 6% non-JLG.
In terms of number?
In terms of portfolio.
And
in terms of number, maybe about 2% of the customers.
Okay. So you are, the RBI gentleman is listening to you, are blaming continuously 85% and all. So
no. There is okay. Why we are not doing different?
Okay. No, but you don't need to be an MFI NBFC. You can be an NBFC and get into that, right? Yeah. Then you can skirt that 85% rule. I can be an NBFC and still in microfinance. So am I correct in saying that?
It's possible.
Yeah.
It's possible.
So if there are.
That won't be.
Okay.
There's a two dimensions.
But sir, when the concept of microfinance is changing, I'm just saying when I'm giving somebody 8 lakh and 10 lakh and 20 lakh, then it's no more a microfinance, no? And you don't have any mid-finance thing.
That is only 15%. You cannot do more than that.
No, I'm just saying for NBFCs, I mean, you are saying not 10%, but I'm just saying then if the concept itself is changing, it's not, you don't call it microfinance, no? You don't have to call it microfinance. Okay, right. Okay, now, yes, now I am coming to Naveen because this credit high mark, and I think both for this upgradation or evolution as well as Reserve Bank of India's new rule that is coming, your kind of organization, this credit information plays a very, very critical role. In the first panel, I heard that account aggregators are of not much of use. My understanding was that account aggregator will be of great use, and it's a great innovation by Reserve Bank of India for data aggregation with the consent of the with the consent of the customers. So I think I personally feel, and I might be wrong, please correct me, that in this evolution or upgradation, this Credit Information Bureau plays a very, very critical role. And even for Reserve Bank of India's new circular, as and when he says that just wait, which means it's coming, it's not waiting for Godot anymore, it is coming any day. There also this Credit Information Bureau plays a very critical role, because I'll be able to charge different interest rate in the people in the same vicinity, same area. No more 18% all. It could be 16%, it could be 21%, it could be 18%. Right? So tell us what kind of role you do play in this entire new architecture. You meaning your community, I mean.
Yes. Thank you for the question. And I think 2 points that I would like to start off with.
We'll take a few questions after that before we come to the last round. I am keeping eye on my mobile, not for any message, just the time, nothing else. So please don't think that I'm distracted. I'm just keeping time part. So please, the microphone keep ready. Interesting subject. Anybody wants to have any question after this, and then we'll get back to our discussion last round. Yeah.
Sure. No. So I would like to start actually with a macro picture. Right, MFI borrowers today that are live are approximately 6 crores. 6 crores people who have an MFI loan today. And when we speak about this particular topic...
Sir, when you say MFI, they are not bank, no microloan from banks, exclusively MFI.
When I say MFI, it is group loans. Okay. The JLG, right. That is what I'm talking about. Okay. Joint liability group loans.
Yes.
So individuals are approximately 6 crores. And this shift or evaluation or graduation, as we are calling it, has already started. So it's not something new. It is a part of the DNA, and I think it is customer centric. When the customer is graduating, we are seeing that certain organizations are also graduating with the customer to meet the customer needs. So specifically, if I see the data is showing that around 2 crores people have also taken an individual loan. Now, that individual loan may not necessarily be the need of this lady alone. It could have been because of a business, it could have been because of an agri loan, it could have been a KCC card, it could have been a personal loan. I've also seen there are consumer durable loans that are coming, as small as 9,000. So the previous panel spoke about technology, and smartphones now is 9,000. So we are seeing that graduation already happen. So I don't think we have to change too much. So that was the first thing. The second thing is that we have data that comes in from MFIs for the group. We have data that comes in from individuals, from all the lenders also. Now, this comprehensive view is already available for the lenders to decide whether they would want to give a loan or not. If they are giving an MFI loan, yet they can get a comprehensive view. If they are giving an individual loan, they can yet get a comprehensive view. So I think there is more visibility that is available. Having said that, I do believe technology plays a very, very important role. And to your specific question, I think account aggregation is a way forward. It is a big step forward. Open banking, open finance is very, very crucial because this lady is graduating and she might have picked up a two-wheeler. I heard Udayji speak about, secured and unsecured. May not necessarily be that individual loan taken is for her. It could have been for a husband, it could have been for a child. Now, what is happening is in account aggregation, if we have the bank account details, we get all the transactions. And I think a few of the panelists spoke about the advantage of seeing that. Also, we heard, the key panelists talk about that once from GST data coming in, that will become super useful. I personally believe that what is available as a credit history is one option. Touch, meeting people is the second option. Alternative data that is available is the third option. All these are just going to help improve the complete picture so that you can make a more informed decision. And I think it's the right way forward.
So absolutely. So GST and then FM spoke about 44 crore, 440 million Jan-Dhan accounts because that's the money, you are getting the money through there and everything else. So you are saying the time is right actually.
For the graduation, it's already happening, sir, it is already there. And I think when we say microfinance, we should not limit it to microcredit. I think we have spoken a lot about microcredit. There was a little conversation on micro insurance, micro investments, because all this will be available in the account aggregation also.
Absolutely, that's what I also felt. And I think Reserve Bank of India new norm as and when it comes will be also a booster dose for the entire thing because there are lots of things which actually an impediments at this point of time. Whatever the draft we have seen and the discussions, I think they are being ironed out, and when we see it will be a level playing field between it will encourage competition and there will be a level playing field, I think, because many of the corners, again I am repeating that microfinance entities are being pushed by banks and things are happening not the way it should happen. But once all these things have been addressed and particularly Reserve Bank of India norm also been out, I think that will be, then you will be almost ready for this leap of faith for the second level. We'll come to the last round, very brief, but before that, any question? Anybody else? This lady has one. Anybody else? Please just, no comment please. Comment, we can all have discussions over dinner. Just the question, introduce yourself and the question. Anybody else, just raise and get the microphone so that we can shorten the time. Yes, ma'am, please.
So quickly, just one question.
Please introduce yourself.
Yeah. So I'm Sonal Jetli. I'm the gender lead at Microsave Global Consulting. I wanted to ask Bala sir how easy it is for an SHG member who's running a profitable enterprise to get an individual credit and credit that is high size, because overall the RBI data shows that it's extremely, or I should say it's the, the numbers that RBI shows, it's the rate of individual credit that women are getting are dismal. Overall, it's less than 9% individual borrowers in India, and even in the small borrower accounts category, there is a huge gender gap. So we think that because of availability of microfinance in India and because of the success of SHG BLP program, women are getting abundant credit, but the figures don't show that. The gender disaggregated data of RBI shows that even in that category, women are getting only about 30%.
Thank you. Thank you, ma'am.
Yeah.
Yes.
Actually, I already mentioned about it. It's very difficult. And rightly, as most of the members pointed out, it's the time and that gradual, that graduation time has come up. And right now, I already mentioned about it. To give example of Bihar, right now, we have 10 lakh SHGs. We almost completed first linkage for most of them. We have this kind of a situation where more than 2 lakh SHGs are moving towards getting 5 lakh rupees, where the quantum of loaning to individuals will go up. But to address your question specifically, we have done the mapping. More than 6 lakh SHG members are doing small shops. How easy for them to get individual loans from bank? It's very difficult because the poor lack of transaction history, books of records, they don't have, and then they don't have formalization because they are yet to get registration. You have a problem of business plan preparation. That's the reason I mentioned that this platform is very handy, helping them to do that, and we have started doing that, and I think this is the time to move to the next stage.
Thank you. Gigi, I think you wanted to ask some question, right? No. Anybody else? Okay. Oh, I thought you were looking for the microphone. Yeah. Yes.
Hi, this is Venki from HDFC Bank. Uday, today the NBFC MFIs are constrained by the fact that 85% of your assets have to be in qualifying, which is so-called JLG. In the new guidelines, I'm not too sure whether that constraint will remain. If that remains, of course it remains. If it doesn't remain, then is there a possibility of a significant shift to individual loans because of the fact that you do better credit in an individual loan as compared to a JLG, which there is hardly any credit except for bureau?
Okay. Thank you.
Yeah, there will be possibility, but it will take its own time for some time because one has to create the infrastructure and technology investment for this, for a microfinance company to build the secured book, whether it's two-wheeler or housing or LAP. So it may definitely take a big leap going forward if such restrictions are not there. That's a potential. Okay. Because there is, if the 25 years of JLG, there's a huge chunk of a microfinance customer in the industry who are more than 3 year, 4 year in microfinance. There's a huge number of such women who are already into some kind of business, stable business and stable cash flow. I think there's a potential for them to move into an individual loan. Definitely there's a high possibility of growth.
Thank you. Anybody else? No, doesn't look like. So we have about 10 minutes max because I don't want to spoil professor's party. Now I am professor, the next thing, reading that. So quickly, and this is an observation I would like you, each of you to react. I'll start from you from this and on all. I do in my professionally do interact with investors, impact investors also. Now, of late, what we are seeing, and not one person, many of them, that your entire microfinance story is a myth. Nothing has been happening. What we do is this: every 3, 4, 5 years we make money, and then something happens, either Andhra or COVID or Assam, we lose money. That's it. And give me some data, how many people actually have gone up from the poverty level and level 2, level 3. Can you tell us? That's what, I mean, it's a kind of disappointment that microfinance is a much talked about, but nothing on the field. It's not. It's the same old story. They said you will find some reason external, either political reason, elections, or something on which we don't have any control, COVID, or self-made like Andhra or Assam. So we give them money, we make money 3, 4 years, then we are ready for next 2, 3 years losing money, institutions is going nowhere, and people are not going anywhere. And then one institution I would not name, a very senior person, I asked this gentleman last week, keeping mind in this thing and all, not from your organization, not from SIDBI, but a similar organization which should keep a tab and all. He said, unfortunately, we don't have any data. We have to look for, is there any data? I just asked that, can you tell us data over a decade, like the beneficiaries, how they have gone up to the level, in the socio-economic status, their income, etc., etc. Is there anything available anywhere? He said, no, I can't think of. So suppose this audience is made of only investors, and they feel this way. How do you address that? This is nothing to do with this, but again at the same time it's very critical at this point of time, at this juncture. So I'll start with you, and one minute each, that's the end of it.
Sure. So again, what a bureau has is data that is provided by all the lenders. So what I can tell you, which might be useful, and the other panelists can give the specific answer to your question.
Please, is there any basis in this notion, or it's all
what I can state is that from March 20 to December 21, additional 16 lakh people within the MFI got a loan. So there is a growth, right? 16 lakh individuals were added within the MFI group. Some must have fallen off, but I'm just talking about 16 lakh were added. I think that is the thing that I can bring because that's the view I have. But I think Mukul, Uday...
No, Naveen, you have not got, not the additional thing, how microfinance is changing people's lives.
That I don't have a view. I really don't have that data, then I can't give you the view because I'm not on the ground.
Okay.
But these individuals are on the ground, so they would be able to say that.
I would not take more than 10 seconds to answer your question. They are all welcomed in Casper. We are 22 years old organization, though I cannot speak for the sector, but we have proven and all our stakeholders know that Casper has not burnt money, over last 22 years. Even after Demon, within next 6 months, our portfolio at risk 30 days was at 0.37%. Currently, after all the waves, it is still at 0.7%, 30 days, And we annually measure impact of our programs in terms of PPI and other economic parameters over the lives of our beneficiaries. And it is done annually through annual impact assessment surveys. So they are all welcome to come and scrutinize.
No. So please tell us, forget that bit. So tell us, how do you see the upgradation?
So there is a significant improvement and we measure it, and we internally have set up a target that all our mature clients, at least more than 50% of our mature clients, and mature defined as those who have taken 5 or more loans, and have continued to remain with us, comes out of poverty, BPL line. So we measure their poverty line in terms of PPI and CHI scores. PPI stands for Progress Out of Poverty Index, taken from the NSSO surveys.
Thanks.
10 questions, all of
Well,
that.
no, that is very critical because if you indeed see that they are upgrading and then the evolution from JLG to individual becomes far easier.
And I would like to share with you, post first wave, there was a decline in percentage of mature clients coming out of poverty. There was a decline, but recently, the recent survey has completed and it has increased and crossed 50%.
Okay. Bala?
We can take
why it is relevant, I said, if indeed you are seeing they are going upward.
Absolutely.
So then they are eligible for individual loans and higher entities.
Absolutely, yes. And we have not only studies done by SRLMs, we have third-party studies conducted, and you have data, and then we can have a 1-hour lecture. But to say to the audience, we have a practice called village organization having a chart. Village organization, if you go, it's 150 members. If you go to village organization, they have a chart which says out of 150 members what they do. Out of 115, अभी आज के दिन में 15 लोग अभी भी गरीबी में हैं, 135 लोग, 135 people moved from this level to this level, and out of 115, 60 of them are doing 3 livelihoods.
Excellent.
And 15 of them are doing enterprises, and then how many of them are having more than 1 lakh income per year? These kind of action. What I'm trying to say is that it actually played its role and moved people, helped moving people from one level to other level.
Good to hear that. Yeah, Shiv Kumar.
I'd like to answer this.
Use this.
I'd like to answer this positively.
Please.
It will be cynical to say that poverty has not been alleviated. Some of the indicators. See, these loans are given with an end use. So we can, while there is no attempt yet made of what is the improvement, the amount of two-wheelers which get sold, the amount of cattle which get added, because these are all clear assets which are there. So there has been this asset creation, unlike, let us say, a program like a crop loan, which is just a revolving, money has been given some time back, it's just going around. Second is, this has done something, for instance, the reference rate for lending before microfinance came into picture was usurious. And you have data today of Andhra, what's happening. So if nothing else, I think the interest rates have been brought down to these people because of the microfinance activity. And third one is, I think it's because of this sector becoming so large, that, institutions like banks and SFBs and regulators have actually come to know that this sector exists and that lending can start at this level. Otherwise, I don't think anybody would have been interested in lending below the 10 lakh segment. So poverty and all that is always an element which can be doubted. Different people can take a view of it. But these 3 points are in itself good reasons for microfinance to exist.
Thank you, Shivkumar. Yeah, Uday, last word is yours.
I'll use some proxy numbers.
Please.
One is we saw in the last 6 years, CAGR growth of borrower, GLP per borrower is almost 12% increase. So that means they're able to serve the higher loan. That is one. And the PPI, that's progress out of PPI index, which also shows about 10% increment in their income. So it's basically used the index, which is based on their asset sector. And the third one is 60% of our customer, even microfinance customer, having two-wheeler today. 60% of entire microfinance customer having two-wheeler today. That's the third one. And the fourth one is 95% of microfinance customer have toilets. At least 50% of them have borrowed money and built toilet. So had they not improved their cycle, probably they would not have done this. And the last one, actually, we tried and checked the dropped customer. Customer voluntarily said that no more I need microfinance. When we checked them back, 77% of them have not borrowed from anybody. Which may not be, they don't need money, probably. They're enough for, so I don't need microfinance money. Probably they will move eventually. So with all these proxies shows that there's a good improvement.
Okay. I would not take time to summarize everything because already we are almost on the dot. So I think a lot of food for thought. SIDBI chairman is here. Reserve Bank of India representative is here. 2 microfinance organizations, CEOs are here, and the entire industry is there. So the key takeaway is I think the right architecture is in place. It's not a leapfrogging in that sense, but I think we have reached an inflection point where time is ripe. I mean, inflection point to not to shift completely, but to graduate from JLG to the higher level, individual levels. I think the right architecture in place, technology is in place, and you are willing. You are willing. So with that, I think it should be a good story, and I must congratulate SIDBI to choose this as a subject for discussion. Just give them a big hand. Thank you.
Thank you very much, sir. Ladies and gentlemen, technology is playing an increasingly significant role in microfinance operations. I'm going to, at this juncture, thank our esteemed panelists, and now at this juncture invite Shri S. Ananthakrishnan, GM SIDBI, to kindly join us on stage and thank our esteemed panelists. Sir, please join us on stage. Let's start by thanking our moderator, Shri Tamal Bandyopadhyay. Let's have a big round of applause. Shri Bala Murugan D, IS, Chief Executive Officer and State Mission Director. Let's have a big round of applause for him. Shri Mukul Jaiswal, Managing Director, Cash for Microcredit. Let's have a big round of applause. Shri Uday Kumar Hebbar, Managing Director and Chief Executive Officer, Credit Access Grameen Limited. Shri Naveen Chandani, Managing Director and Chief Executive Officer, CRIF Highmark Credit Information Services. Let's have a big round of applause. And Shri Sivakumar BS, President and Business Head, Agri Finance, Kotak Mahindra Bank. A very big thank you to our moderator and panelists. Sir, I request you to stay with us, Anand sir, and get a group photo with the panelists. Thank you so much for that group photo opportunity, esteemed panelists. And thank you so much for really valuable inputs there. Thank you. Now, ladies and gentlemen, the reason I was mentioning technology earlier is because we really need your help in spreading the word about this event. And we have a hashtag going, which is hashtag 3rd National Microfinance Congress 2022. And As most of you would know, we have Twitter and Facebook handles where you can spread the word and share takeaways from this event at SIDBI Official. At SIDBI Official, all small is our Twitter handle, and at SIDBI Official with the first S capital and official O capital is our Facebook handle. So please do share lots and lots from the event so that there's takeaways and we can spread the word to the world, spread the word to the world through our social media platforms. With that said, give us just a bit and we will reset the days in no time. Stay with us, don't go away anywhere.
प्रयास लो, सिडबीज डिजिटल प्रयास पार्टनर जर्नी। आइए देखते हैं इस डिजिटल इनिशिएटिव की जर्नी। इस इनिशिएटिव में पार्टनर इंस्टीट्यूशन के माध्यम से सिडबी के द्वारा लोन प्राप्त किया जा सकता है। सिडबी की प्रयास स्कीम की मदद से अपना छोटा व्यवसाय शुरू करने के लिए उद्यमी पार्टनर इंस्टीट्यूशन के ऑफिसर से संपर्क करता है और उसके केवाईसी डॉक्यूमेंट और बेसिक लोन इंफॉर्मेशन लेकर पार्टनर इंस्टीट्यूशन का ऑफिसर प्रयास ऐप में लॉगिन करता है। उसके द्वारा कस्टमर का आधार नंबर डालकर कस्टमर के केवाईसी वेरिफिकेशन की प्रक्रिया की जाती है। पार्टनर इंस्टीट्यूशन लोन डिटेल्स और बेसिक इंफॉर्मेशन के साथ ही इनकम एक्सपेंडिचर इंफॉर्मेशन भी फिल करता है। इसके बाद पार्टनर इंस्टीट्यूशन ऑनलाइन ब्यूरो से डाटा प्राप्त कर आगे की प्रक्रिया शुरू करता है। इसके बाद पार्टनर इंस्टीट्यूशन ऑफिसर लोन एप्लीकेशन को पार्टनर इंस्टीट्यूशन चेकर के पास भेजता है। पार्टनर इंस्टीट्यूशन चेकर डाटा को वेरीफाई कर लोन एप्लीकेशन को सिडबी में फॉरवर्ड करता है। सिडबी लोन ऑफिसर प्रयास ऐप में लॉगिन कर डाटा वेरीफाई करता है और सैंक्शन करने के लिए सिडबी चेकर को भेज देता है। सिडबी चेकर डाटा चेक कर लोन सैंक्शन कर देता है। अब पार्टनर इंस्टीट्यूशन लोन ऑफिसर डॉक्यूमेंट्स की ई साइनिंग और ई स्टैंपिंग की प्रक्रिया यानी प्रोसेस शुरू करता है। इसके बाद कस्टमर और सिडबी ऑफिशियल को एसएमएस और ईमेल द्वारा NESL से डिजिटल डॉक्यूमेंट्स का लिंक प्राप्त होता है। कस्टमर लिंक को OTP द्वारा खोलता है और उसके बाद निर्धारित डॉक्यूमेंट्स इलेक्ट्रॉनिकली ई साइंड और ई स्टैम्प्ड हो जाते हैं। इसी तरह सिडबी ऑफिसर भी OTP डालकर लिंक खोलता है और उसके द्वारा निर्धारित डॉक्यूमेंट्स इलेक्ट्रॉनिकली ई साइंड और ई स्टैम्प किए जाते हैं। अब पार्टनर इंस्टीट्यूशन लोन डिसबर्समेंट रिक्वेस्ट इनिशिएट करता है और पार्टनर इंस्टीट्यूशन चेकर इसे दोबारा चेक और अप्रूव कर सिडबी को आगे भेज देता है। सिडबी ऑफिसर दोबारा डिसबर्समेंट रिक्वेस्ट को वेरीफाई करता है और सिडबी चेकर लोन अमाउंट और अकाउंट डिटेल्स वेरीफाई कर लोन अमाउंट बेनिफिशियरी यानी लाभार्थी के खाते में क्रेडिट कर देता है। इस तरह बड़ी आसानी से सिडबी और पार्टनर इंस्टीट्यूशन के माध्यम से बहुत ही कम समय में लोन प्राप्त कर छोटे उद्यमी अपनी जीविका का साधन अपना रहे हैं। प्रयास ऐप से अपने प्रयासों को सफल बनाएं। सिडबी आपके साथ है सिर्फ।
Ladies and gentlemen, it's time now to get started with the next and the final panel discussion, which is going to be equally relevant and insightful. May I request you to please take seats so that we can begin with the panel discussion. Ladies and gentlemen, I'd request and urge you to please be seated now so that we can start with the discussions. This is the final panel discussion. Our eminent panelists are all here waiting to get on stage and talk to you. May I request you to please be seated, ladies and gentlemen. Gentlemen in the front, may I request you all to please be seated. We have to now be a witness to our final panel discussion. May I request you to please help us get the house in order. All right then, ladies and gentlemen, once again, welcome back. Now, as microfinance has a high-touch, doorstep service delivery model involving intensive interaction between field staff and customers, finding the right balance of tech and touch is going to be critical going forward, and that is what our third session strives to discuss. To moderate this session, ladies and gentlemen, I'd like to invite on stage Professor M.S. Sriram, Visiting Faculty, Public Policy and Chairperson, Center for Public Policy, IIM Bangalore. Welcome, sir. And our panelists are, ladies and gentlemen, I'd like to invite Dr. Pawan Bakshi, India Lead, Financial Services for the Poor, Bill and Melinda Gates Foundation. Dr. Bakshi's focus area is development of low-cost digital services. Let's welcome Dr. Pawan Bakshi with a huge round of applause. Welcome, sir. May I invite Shri Devesh Sachdev, Managing Director and Chief Executive Officer, Fusion Microfinance Limited, one of the upcoming MFIs in India. Welcome, sir. I'd also like to invite Shri Deepak Amin, Promoter and Managing Director, Light Microfinance Private Limited. And let me tell you, Shri Deepak had a stellar career in Microsoft before promoting Light Microfinance, and he's a technologist come microfinance practitioner. Big round of applause for Shri Deepak Amin. I'd like to invite on stage Shri Ajay Kamal, MD, Jana Small Finance Bank Limited. Let's have a big round of applause for Shri Ajay Kamal. And may I invite Shri Amit Arora, Senior Financial Inclusion Advisor, World Bank. Let's have a big round of applause for Shri Amit Arora, please. With that, I'm now going to hand over the proceedings to Professor Sriram to kindly take over. Sir.
Thank you very much. Good evening. This is the last session. I hope you'll have patience till we sort of run out of our steam. In fact, when Tamal was saying that it has left enough food for thought, I think we'll end up leaving enough thought for food. That's what we'll try and do. Thanks a lot, SIDBI, for organizing this. I think the last Congress that was organized, I had mentioned it feels like an industry association meeting and not like an alumni association meeting. This time it again feels like an alumni association meeting, so we are back to basics, which is nice. Which means that there are familiar faces, all of us are meeting each other after a long time. I think this has just opened up the possibility for all of us to just come. So I think it's just exploded, and I think this will be the start of the next phase. That having said, when Tamal was managing the session and before that also, I kept wondering, are they stealing our topic? You know, Uday even said high tech and high touch. Then I thought possibly they are not stealing our topic because there's nothing like individual property. This is all common property. So therefore, we move seamlessly, and this is not group. This is not individual. This is group. So therefore, we are moving seamlessly from individual to group, group to back to individual, and so on. So we just keep learning and improving and going. Not in circles, but round and round. That's a little bit in circles. Okay. I'll start with one question, which is for all the panel members, but I'll go one by one. Where is tech going? I mean, high tech, this thing. In terms of how we are evolving, there are three parts of tech. One is transaction capture. Second is exchanges, which is payment systems, and the third is use of tech for making decisions, loan decisions and so on. Given these three buckets, where are we going? I'll start with you, Deepak, first, since I just discovered that you had a tech background. Yeah, sure. Then I'll move to the others.
Yeah, so actually there is no end to answering the question of where is tech going, but we'll try and restrict it specifically to the microfinance sector. Yeah. So broadly, the way we look at it, in fact, one line that I do feel was stolen by Uday was the whole thing about touch and tech. In fact, I feel that this topic shouldn't be from high touch to high tech. It should actually be high touch and high tech. Because lending fundamentally is the easy part, is the collection part, which is the difficult part in this business. And even at Light Microfinance, we look at the whole thing as technology at the core, high tech at the core, and high touch at the edge, right? So the core is driven by technology, and the touch still remains whether it is enabled by technology or not. In terms of trend lines, if you look at it last several years, I would say from my perspective that the largest credit for the tech enablement in this space actually should go to the government, right, and the regulator. If you didn't have the JAM trilogy out there, if you didn't have the network connectivity out there, if you didn't have the mobile phones out there, if you didn't have smartphones out there, all of this technology that we're talking about specifically to this sector, I'm not talking about in general to high tech. It would just not be possible for us to be even talking about technology for this space, right? India is a very complex country. We have 620,000 villages, and believe it or not, even today there are 25,000 villages which don't have any internet access and don't have any mobile access. So for us to talk about access to finance, we actually have to go all the way back for a small segment of people to say, first, let's start with the basics, right? If you look at October 2020, and just to see that where, India is like a snake, right? The tail is way back there, but the head is way out there. In October 2020, India had roughly 4 crores per day of real-time transactions, right? This is just 15 months ago. Guess what the number is today, 15 months later? 15 months later, we had 14 crores. 15 months ago, we crossed US and China in real-time transactions. Unheard of if you had to think about it 10 years ago. But if you peel back the onion and see why that happened fundamentally because of this large-scale top-down interventions. Now, once you assume that that is in place, then Sriram, what you're saying, all of that starts applying, right? Analytics. Reaching out to these customers, getting in the transaction data, and then sitting on top of that KYC, which was a big hurdle. All the microfinance practitioners here will know that KYC was a huge headache. To some extent, it still is, but it's largely been solved now. So technology is heading in a direction where adoption is a no-brainer, right? It's no longer a question on whether adoption will happen or not. It's a matter of how it is that we're going to adopt it so that it happens more efficiently, it happens deeper, it happens more specific to that particular customer. And I think Mr. Sharma had mentioned that the new regulation guidelines are coming out. They've worked very closely with all the stakeholders to actually understand that it is not just one size fits all, which is actually the current regulation, but the new regulations will allow that analytics. Otherwise, what's the point of doing analytics? What's the point of capturing all of the data?
Sure. I mean, part of it is, of course, this top-down government, but I guess the ecosystem also evolved side by side. I don't think we should take credit away from the rest of the ecosystem. I remember when microfinance started, one of the earliest conversations I had was with Vijay Chandru, who had just launched his computer. And they said, this is the most appropriate device for microfinance, so how can we get it on? Just went nowhere at that time. So unless you have the ecosystem, it is not that, ideas were not there, but there is a time for the idea also to evolve. You need...
it was a wonderful product. I actually played with it.
Yeah.
Very nice product.
Yeah, so you know how old I am.
Or I am.
So, Devesh, since you have sort of done the journey over a period of time, how do you see tech evolving in your own lending process? And are you sort of going to do away with groups? And I know that since they took a part of our this thing, we'll take a part of their theme as well. Are you going to do away with groups and move on to individuals?
So I will, this whole, the model, I'll put into 3 buckets. The first bucket is your organization's internal workflow. I will not talk about it because Uday has mentioned, Deepak has mentioned, completely now, wing to wing, it is automated today, starting from sourcing to this thing. Because of the infrastructure and the overall development, IT investment that the companies have done, so I will not talk about that. The second bucket is the customer interface, which is when our field officer is meeting the customer. And the third interface is the customer's ecosystem. So I'll just talk about some of the, though people are talking about, I know technology is the way forward. It has immense value, kind of productivity, turnaround time, customer service has improved. But I will still like to highlight some of the things, some of the points which I feel are very, very critical, and we have to really sit back and think about those points. So I'll first talk about the customer interface. The first point is, our MFI, our field officer and the recipient digitally savvy? Our customers, I think, when I'll tell you, Professor, very recently I was traveling to Varanasi and went to one of the village very near to Varanasi. Look, when I look at some of the customers, especially we are rural MFI, this customer is not digitally literate or very less literate digitally. This customer is vulnerable. This customer is gullible. This customer is anxious. So the point I'm trying to drive here is that we are not talking about digital frauds. We are not talking about cyber crimes. We are not talking about the fact that how this customer, how all this can be misused and can create a lot of anxiety for that customer to really come back. We are not also talking about the gender divide in the digital thing. So and are we really talking about what kind of capability building we are doing? Yes, at Wing to Wing we've done a lot of work. You look at the workforce, which is actually touching the customer. There is a churn of 30 to 40% every year. Are we doing enough to build the capability? The second point is that, yes, we need to have a more calibrated approach, because sometimes I feel that we all proudly say that 95, 99% we are cashless. But are we really doing it because it is reducing our risk? Are we not increasing the burden on the customer? Everybody agrees. Today, it is linked to the customer's ecosystem. Customer ecosystem is still cash. So is this customer is still going to the bank and withdrawing this thing? I have seen, personally, my experience in center meetings, where disbursement time, some of the customers saying, कि आप हमें cash में क्यों नहीं देते? So my point here is that let's not,
So are you, when you said churn, is the part of the churn because of transaction, the nature of transactions, or is it because they are unable to?
No, people leave.
But why do they leave? I mean, that's a question.
No, I'm saying churn in the employees.
Oh, employees.
Employees. So you have to build capability. Then, we have to be very mindful that the whole model is based on a certain discipline, which is on the touch side. The rigor around customer meetings should not go away, and the softer aspect. People have talked about in the previous the softer aspect of assessing the customer. So I think these are, and then understand the client ecosystem. We have to spend we have to really think, are we doing enough on, doing a digital literacy? I think that is what the first, my initial, comments on what you've said. The second point is, yes, I agree with the previous panel that it should not be seen as a DNA change. It has to be graduation. But however, every company has a different way of handling this thing. We are also building a MSME. We already have a more than 100 crore of book now, but we are handling in a very different manner. People said that most of the companies are trying to do in a manner where they're saying we will graduate our customer. No, I think what we are doing is building capability to assess, doing customers, not captive customers right now, because that's the easier thing to do in my mind. I think first thing is building capability, team, credit assessment, try this in the geographies where you're present, and then do some kind of conversions. So we are looking at it very differently.
Thank you. Pawan, if I can come to you. I mean, this is a little bit of a fixed match because we have had a conversation before. And Pawan was saying, oh, no, I have a solution for some of these things that these guys are discussing. So I have a twin question for you. One is, why do we need group? And when there is an immediate requirement, you said that, they need money and, you can't wait, and they'll go to the nearest available point. So therefore, it is possible that I send an SMS, I get a loan, high tech. But The other possibility is, and no conversation in microfinance is complete without bringing our maids and drivers into the conversation. So I keep getting these messages, pre-approved loan, 15 lakh rupees, just press this button and you'll get it. I also get, just in case people should not get mistaken, I also get messages saying, do you want to be a Swiggy boy? That's a different matter. But the day my maid gets that offer, she will press the button. And what is the risk involved? So these two, I want you to look at the opportunity as well as the risk, both together.
So I think, well, a couple of things. First, I think, like you rightly said, we could kind of debate till the cows come back home on what should be the underwriting kind of mechanism and this and that and everything else. But when the lady needs a loan, she needs a loan. And she will, if you don't ever give it to her, she'll go out and get it. And which is what is happening even now, right? So the question is, what do we need to do to be more customer kind of centric and meet her needs in terms of speed and quality and the amount of loan that she needs and the credit that she needs. The other is, on the other side, so we should, as a student, I would look at the demand side and the supply side, and I'd say on the demand side, as Devesh said, there are a lot of other challenges and issues and stuff like that, but on the supply side as well, there's an important thing to do. So on the demand side, first of all, why should we only look at credit and not start with a risk profiling of the customer? Why shouldn't she start with an insurance first to try and protect the risk? And then she can do a graduation into loans and credits and doing other things else around it, because what we want to do is protect her as well and her livelihoods and her family and build a lot more resilience in the ecosystem. She should be able to bounce back from events which have gone and hurt her, which means that we have to very clearly define what are the value propositions for the segment of customers that we want to serve, which is one. And the other thing which you said is about technology, on the front end and the back end. My view is, and I hope Deepak will agree with it, is that technology today allows us to put all the complexity of doing this at the back end and make the front end so simple that everybody and anybody should be able to understand it. And let's take an example of mobile phone usage, or telephones. Nobody taught people how to make and receive a call. It's driven by a value proposition, and let's look for that value proposition, because if we are not trying to solve for that, we are not going to get the right type of answers, is my sense, and that's when we'll need to push, right? So I think we need to be able to understand what is happening in the marketplace and try and solve for that. The other piece now is technology on the supply side. Now let's come to the supply side. We have various types of MFIs, small ones, large ones, and medium ones. You can take it on the basis of customer base or employees or AUMs or anything else around it. Not everybody will be able to kind of digitize all their workflows on their own independently. What do we need to do? Is there a scope for us to build shared infrastructure? Right? Like we've gone and done in, say, in the BC networks. APS today allows us to share that infrastructure across banks. It reduces costs. Can we share the core systems in the cloud where it's multi-tenanted, where the data systems stay in there, but it's protected, and all the other things, and then MFIs can focus on what's happening on the ground. That will reduce the cost of digitization. Plus, what it will do is it will allow MFIs to focus on the core things that they need to do. They don't need to build staff capacity to do IT systems and do other things, which is because then that comes in from the ecosystem and then that gets solved, right? So that allows you to be able to do these things, and there can be enough and more stuff in white label clients where you've got your own branding and everything else around it, and we will do that. That's an option. We could explore that.
Since you come from a certain sector background, you're being very magnanimous. Do you think you need to own the client? If the same argument was made by Ajay, I'd be even more convinced. But you making that argument, I'm not very convinced.
No, the
this white label client, white label provider, I can understand. White label client.
When we talk of white label clients, it's a handphone client, which is branded in a certain way. The customer or the client will still be owned by the MFI. There is no, it's a semantics. So the client I'm talking about is not the physical client who's the lady, the handphone, right? If that is the client that you are talking about, and there's a difference in a client and a customer. So that's what I'm looking at. And I'm saying, therefore, can technology accelerate meeting her needs in a much easier way? And the reason I'm saying this again is because if you look at, if we start taking bite-sized chunks out of the business and saying, I'm going to now digitize this versus now digitize this versus now digitize this, then we are essentially trying to do, I think, a digitization of existing processes. But what technology allows you to do a complete amount disruption in the process. And which is what he spoke about as well, on KYC as an example. Paper-based KYC used to cost 500-600 rupees. Now it costs under 50 rupees. Right? That is the disruption which we are talking about. And we need to all think in terms of disruption and how do we utilize that to reduce costs, increase efficiencies, meet customer needs. And I think that's where my urge is going to be to start to think. But I completely also agree that there is a not just a gender divide, but also a digital divide and everything else around it. But the progress is there to be able to show that we can move ahead. Right? And what do we need to move ahead at what speed we need to move ahead will differ on geographies, on segments of customers, but there is movement ahead.
I'll just quickly add to this point. In fact, this exact initiative was started many years ago, back in 2007, 2008. And in 2009, this software called MIFOS was launched. And it was in fact funded by the Gates Foundation, and I was very closely involved in the initial architecture of that product. But it was built in Bangalore. And for various non-commercial and non-business specific reasons, they eventually decided to move it out of India and into Africa, as you know, the history there. So those initiatives actually have taken place, and it was immensely beneficial. And MIFOS stands for Microfinance Open Source, right? And it was meant to be exactly that, open source. And now FinFlux has taken over the open source and they built a commercial model out of it. So there are examples of this already, yeah.
So I'll go to Ajay. Ajay is a unique guy in this panel because he's the only one who runs a bank. All others run companies or people like me who just give GAN. Ajay, I know that Jana was one of the earliest to get onto the CBS, and I think right from the day go, there was a fair amount of focus on technology. I mean, it was born with a DNA of technology, you know. I'll not try to expand DNA. I'll leave it to Tamal. Given that that was the investment made, and you were one of the earliest MFIs to have CBS, and also load on a savings product along with Axis Bank, if I am not mistaken. Is it an advantage for you now? That's one. Two is, you're the only guy who can take savings in this entire group. So how do you use technology on the savings side? And is that helping, or is it just business as usual? Sorry.
So thanks. So first things first, probably by June, all our 30 lakh customers will be able to press the app and get a personal loan. So microfinance customers are retail customers like everybody else, and there is no reason why, after having good credit experience with them, we should feel anxious about making life easy for them. So our app in multiple languages will be out and running by June, where we will load up your ability to borrow at a press of a button. Of course, amounts will be restricted, so that then there is a need to do analysis of cash flows if you want a larger amount, but the basic amount will be available to you. So give you a sense of technology is very valuable. And Sridham, I feel one is high touch was good enough for maintaining our business. So most of the trust factor in high touch is so that you're ensuring your collections are coming. But I think now we have to graduate high touch to education in a more significant way. I mean, we talk of customers' needs going up, but I do think that a lot of their thinking on insurance, on savings, can be done if you really spend that high touch time doing it. I'll give you a simple example. Post-COVID, 40% of our microfinance customers actually opt to buy hospitalization insurance. The same number before COVID was nearly about 2 or 3%, right? Only 40% buy, still not 100%, but I do think that the time spent by the teams now to talk about hospital insurance, thanks to some help coming also because of COVID, has enlightened everyone. That changes. The other piece, very crucial is, I think we don't know enough about our customer. We left it to the front-end person. He meets the customer, he gauges, and the other credit guy goes, makes a sense, and then they decide. I think we should use tech to make sure all the data of the customer actually comes much more. Because right now we only have credit data. We don't know much beyond that, and if there is, it's not completely digitized. So I think tech is really important. We can customize it. We can also improve speed. The final thing I feel is everybody who wants a loan wants it fast, and they want it cheap. Now, how do you make it cheap without necessarily making all the MFIs less profitable? Digital collections will drop the price. The way we deliver credit will drop the price. And certainly if you start doing multi-product, you will drop the price. So I think digital is a clear necessity at the minimum. And I think high-touch model has to change from deriving trust for collections to actually using it for financial education.
What about savings, Ajay?
Right, sorry, I forgot that one. So savings here is what we are trying to do. I think we have opened everybody's bank account, each person has an ATM, each person has a debit card. So that's a reality. But what we have figured out is the transaction volume don't really show up in the savings account. Because most of them are using wallets, right? Any kind of wallet. So at the time of disbursements now, we are actually inputting the bank as a primary bank in the wallet.
Right.
I think trying to make sure that we are the primary bank, we have to ensure that all the wallets in the house has Jana. And we teach them how to send money from bank to wallet and back. I think the point where we believe that ATM debit card, which is a combined card in our case, that will be the primary transaction medium is not very high because the acceptance is not high. But the wallet and QR codes work. So we have moved backward and said, while I do give him an ATM and a debit card, I do think that if I want to increase savings propensity, I need to get and do an alliance with wallets. Yeah. We are exploring a white label wallet ourselves because we do think that has more value when it comes to making the savings work.
Right.
And I think that will kind of reduce the cash in the system.
Thanks a lot. Amit, let's get back to SAGs. I mean, that's one aspect, except for Balamurugan, I don't think it was discussed much. And that's your passion as well. So how do we sort of look at SAGs, their meetings, they also save, plus, the decisions are taken by the groups themselves. So what is the role of technology there, and how does technology make them more efficient? Can they do it with bookkeepers? Is it only about bookkeeping? Is it also about payments? Is it also about credit decisions? Is it also about data? How do you look at it?
Thank you for asking this question, because I had also thought of taking the liberty of making a little more broad-based and not restrict to microfinance, because I'm a little uncomfortable when we say microfinance is equal to MFI is equal to financial inclusion. There is a broader set, not just SHG. I learned from you about PACS. That was a discovery 10-12 years back for me, and that learning continues. Having said this match is not fixed because I am a last minute step in, a replacement. So this is more spontaneous and I'm most underprepared. Technology definitely is a boon, that's we all know. No, I'm not saying anything new here. However, I again get a little wary when we say high touch or high tech or high touch to high tech. सृष्टि का संतुलन बनाए रखने के लिए I would say neither. You know, it has to be a minimal balance of the both in moderation. If we continue to be high touch like the SHG model as it stands today, then the technology part has not played its role. But if we move towards the other extreme, that is too technology centric at the cost of touch, we will lose some original flavors which will be detrimental. To precisely try and address your point, it's a journey. Since that ecosystem is not as savvy as, let's say, the JLG or the microfinance sector, it's taking its own sweet time, and we know there are limitations there, but it's definitely working. I'll give 2-3 examples, and this will touch upon some of the points which came in Tamal's session, Mr. Balamurugan and Naveen also. First point, just 2-3 days back, Bank of Baroda announced KYC based SHG account opening, which is a big leap of faith, but so late in the day. KYC, Pawan, you would recall, you were contributing to its inception. It's probably 5-year late. Couldn't this have been done before? It could have been, but it wasn't a priority because it doesn't attract the kind of investors which seek valuation and build business models there on. So that's the role which technology should play, and make that segment use the technology to its benefit. That's one example. Second example, we all know of NABARD's eShakti. A lot of effort has gone into it. That's very helpful. It has sustainability challenges, and a public good infrastructure needs to address that sustainability challenge, like Pawan said. Third example, NRLM during pandemic has come up with an online SHG bank linkage application portal. And I have not seen a single case study on this, because they are not media savvy. All the banks who do SHG bank linkage, including private sector banks, are hooked onto that portal, and each and every branch, each and every IFSC code, and an SHG loan application can be today digitally submitted. So that's the technology, the kind of drudgery this has taken away, because there are 10, 12, 13, 14 members, and is building that base. I think that would be next to the PMJDY in terms of scalability potentials. There are a lot of upsides. It's a gradual process, and there are a lot of limitations also, and that's where technology should work further on. And I'll probably like to highlight 1 or 2 limitations maybe in the next round. But if we can ensure that this segment of the microfinance or the financial inclusion space also becomes a beneficiary of the technology solution, and the high touch is used to apply technology for their benefit, that would be helpful. I've been a banker, and I've handled CBS migrations at least twice over in my commercial banking life. And pardon me, fellow panelists, and I firsthand know, when you bring in technology, the orientation is what purpose it serves for the supply side, valid. Otherwise you'll never bring it. That's a necessary compulsion. But that's also somewhat of a trap. It doesn't give the flexibility to develop more products. There is a cost involved, and we tend to get into that trap. If technology helps us get out of the trap, it's a huge plus, and we should do that. About 12, 13 years back, I'll just take 30 seconds more. When I started my development banking career, I was told to go and visit a PAX, somewhere down in the, up in the Himalayas, mountains. And I was aghast, a commercial banker having worked with public sector and private sector new age banks, the kind of flexibility that Primary Agriculture Cooperative Society was giving, I can bet my mustache even today. No bank can give that. And sir, you would know, you've been with NABARD, and they were not using technology. So is technology helping us bring that level of nuanced understanding of the demand side? That's the litmus test. That's it.
Thank you. I'd like to ask the 3 MFIs come banks one question, and then we'll move on to the next segment. Has the pandemic hastened the process of digitization and high tech because groups could not come or people could not this thing? How has it affected not the business per se, but how has it affected the way we do business?
No, there's no denying that this because of
Because
COVID.
one of the intention is not to give too much of credit to the government as much as you gave.
No, absolutely. I mean, mind you, I did not say that the government should get all the credit. They're enablers, right? Yeah. So as if there is no enabling environment, the ecosystem can't develop, right? But unfortunately, because of COVID, and it is really unfortunate that in these last 2 years, the adoption has really skyrocketed. Whether it is within the companies or even it is with the customers, right? And I'll tell you, because we have a lot of operations in Gujarat and Rajasthan, all the dairies started paying, online. Right. And earlier also they were doing. It's not that they didn't have the capability, but the adoption just took off. And once it took off, they were giving messages on their mobiles, and those mobiles means then they were forced to use the mobiles. Now they got more comfortable. I was in a field visit just yesterday in the morning in one of the villages, and we were asking the women, right, that how many of you have mobile phones? And it's a funny story because all of them said, oh, we don't have it, our husbands have it and our sons operate and all that. So we went back and forth, what if we gave you, what if we trained you and all that? They said, fine, we'll learn it. And then after that meeting was over, we went off to the side and we talked to some of the husbands. And 2 of the husbands said, 8 of those 10 women you were talking to have mobiles at home. And they are afraid of telling you that they have a mobile because they are afraid of you asking them, did you use our money to buy the mobile? So they are already using the mobile phones, right? So when the question of, is it the right time for us to start doing technology interventions and having them even do repayments or any of that, it's actually a moot question. It's here already.
Devesh?
Yeah. No, you're right. In many senses, in many operations, process we have seen, the adoption of technology has really fastened now. Just to give you an example, I remember when there was a lockdown and people today people could do video center meetings. You can do a video. So that's what in my first comment I said that we have to be mindful, but I think the balance. So as what he was also saying very rightly, why do we think that high touch technology will lead to low touch? I think we can have a right balance. We have seen audits being done digitally. Let me tell you, we did not have a UPI options. We launched UPI options during the COVID time, and through UPI and assisted model, our cashless is now around 25 to 30%. We were 100% cash collection. So that has happened. I'll give you a very simple example. 2-3 months back, we were having a management meeting. Ajay was talking about hospital cash. We also do it. And one of the issue which came on the table was that death certificate, that there's a huge pendency of death certificate. And so I just asked my team, I said, okay, how many channels they have to send that deposit? They said, sir, nothing. They have to come and deposit at the branch or give it to the field officer. I said, aapne WhatsApp diya hai? So the normal reaction was, why are you talking? The customer will not WhatsApp. And you will not believe, we launched it, first day, 8 death certificate came through WhatsApp. It was 8. But I'm saying it shows that there is a, so you have to open more channels. And then we have also seen that technology can now, now most of the MFIs I see who have invested in technology, they have linked all their center points, through GPS linked. Every customer house has been now linked through this thing, which is a huge benefit. As what Ajay was talking about, you can, some of the alternate data people are talking about, you can pick up these data and you can actually do audits better. So yes, I think both from the customer and from our own staff, we have seen the adoption, the overall buy-in is more. Earlier, it was more of a push factor. Now it is a both push and pull. However, again, I'm saying that a lot of work. I know RBI has a deposit education fund. All the SIDBI, NABARD, and MFIN or Sadhan, we have to come together and do a huge thrust on digital education.
Ajay, did you have to make some additional investments? How did it pan out for you?
So I think 2 things, Sridham. I think first is this pandemic was unique. See, a lot of times you get problems, but you have so much to do, you don't have time to solve it. Here we had a problem, and we had all the time in the world to solve it. So I think this was very interesting because you were like, oh, I need to do digital because you can't meet people. But you had like 6 months of lockdown and you could do as much as you want to try to fix it. So I think it gave us tremendous time to really sit back and bring up a solution which normally would have taken a bit longer because it never have as much time, right? I think second thing, Sriram, I think first time digital can save lives became a reality. It was not about saving money, it was not about making profits. It was digital can save lives because you don't want your staff to really get into a moment where he's threatened from a health perspective.
Right.
So I think that gave a real strong impetus to everybody, including staff and management and everybody saying, let's make a difference. See, honestly, the investments in technology is very low. There are a lot of very good young companies who really give you very good technology, very agile technology at very reasonable prices. You don't have to buy the archaic old systems. Second, there is a good ecosystem where you can do APIs and get a lot of data. So I think cost is never the issue. It's about how you want to apply it. And there is an ecosystem which I think is tremendous. I mean, not just for microfinance, but across the board for banking.
Okay, if there are any audience questions, yeah, sure, please go
Just
ahead.
on the same very point, if I just take
Please go ahead,
1 minute only. During the COVID, Government of India announced 500 rupees into 3 times in the bank accounts of women PMJDY account holder. Like you said, that was a lifesaver in a different way. Imagine all these women going to bank branches. Had that APS architecture not been in place, how difficult this would have been for everybody concerned, and that saved the day for the bankers because they couldn't have handled this traffic. Incidentally, we did a paper on this, what we realized, again, to give an example from the NRLM stable, during that period, NRLM in partnership with several banks, both public and private sector, added about 20,000 more women SHG members on ground, and SIDBI had a big role to play in that, providing technical assistance to support this. These women agents, after PMJDY, SSA, all SSAs being covered by BC agents, after AEPS interoperability coming in private sector banks, rolling out large agent network, during pandemic, on a monthly basis, these women agents did about 200 crore rupee transaction, these part-time women agents. And interestingly, even today, after the DBTs have subsided, 70% of these transactions are being catered to women only, for women only. That's the human touch which still needs to be carried forward. Jivika, for example, even today does about through 2,000 women BC agents, nearly 150 crores on a monthly basis when all the BC agent network is already pre-existing. That's the advantage.
Thank you. If there are any audience questions, we'll take 2 questions. Yeah, please.
Hi, so this is aimed at you, Sriram and Amit jointly. We spoke of SHGs. 97% of the market share of SHGs is held by PSU banks. Okay. Now, SHG, unlike a JLG, is not an open market sourcing. You have government bodies like a Kudumbashree in Kerala, SERP, in Andhra, so on and so forth. And all these government bodies insist that the disbursal should be in cash, for whatever reasons. So digitization fails in SHG. Point number 2. Now the only difference between SHG and JLG largely is the savings, which is there in SHG. Now if you see states like Maharashtra, Tamil Nadu, Karnataka, Kerala, you have savings. If you go to Bihar and North, they don't even have 100 rupees per month per member. So they are calling themselves as SHG, but they are as good as JLG because they don't have savings. So we have challenges on the SHG front. Because it's a PSU bank driven business, it's going on. And because of the margins also no private bank wants to get into. So we at HDFC Bank, we are very active in SHG, but these are some of the challenges we face.
I don't think I have an answer. That's a comment. I'll just take it as a comment.
Can I?
Yeah, please.
Give an answer. So Venki, Thank you. Your bank is now coming forward in SHG as much as JLG, but actually it's not an insistence on delivering the credit in cash. It's partly a technological issue and partly a behavioral issue. Technological because unfortunately you cannot debit a group's account and credit an individual member's account in the group meeting using the BC channel or any alternate medium. That's a solutioning which the banks need to provide. If that solutioning can be provided, what I'm trying to say is allow a joint account operation in a group account to happen through a BC channel or a self-service mode. If that can happen and money can move seamlessly from a group's account to an individual's account, it will roll out. That will not be a problem. Then it's a behavioral change issue. And I'm sure Mr. Balamurgan would like to validate that.
Bala, 1 minute. Let's move on to the next question because otherwise we'll go into a loop on this one. Yeah, please.
I need to say this because it's, Bihar has been mentioned. There's the only difference between SHG and JLG is saving. That's not the only difference. The institutional structure and then community involvement, the community resource person, there are so many elements, and then making the institutions a legal entity, for example, getting CLF registration. There are so many aspects which makes SHG different from JLG. That's number one. Second, number 2 point you mentioned about Bihar where there's no saving. Absolutely no. Actually, I'm handling this program for last 10 years. There's a lot of differentiation happened over the years, particularly due to NRLM and also a dedicated structure of SRLM. I can say with conviction, we have data also. Last 10 years, the SHG groups saved more than 1,600 crores that they are using for interloaning. And how much they are saving, 100 rupees, 200 rupees, that's not important. They started saving 5 rupees, 10 rupees. They say average is about 10 rupees per week, that's 40 to 50 rupees for some groups, and it goes up to 100 rupees as you said. So I just wanted to say this because since I am present, I wanted to make this statement. Thank you.
Thank you very much. Any other questions unrelated to SHGs? Yeah.
Yes, Sonal.
Yes, please.
My question is to the panel. There are certain segments that are completely ignored because we have no mechanisms apart from the traditional mechanisms to assess their risk profile. One such segment that is being completely ignored is single young women and especially low income single young women, because the urban segment and the high income, their parents can take care of their credit requirements. So this is a segment where they do not have access to SHGs. Microfinance institutions interestingly don't lend to single young women, they only lend to married women. Apparently marriage increases credit worthiness. So this is a segment which is being ignored, and the macro consequences of this segment being ignored is that women's labor force participation in India has been falling for the last 2 decades. Today we are at 16% according to CMIE data, and if it keeps falling further, we cannot realize the dream of the 5 trillion economy. And what's happening is that low-income single young women who want to enroll in aggregator platforms like Urban Clap or other platforms wherein they could start their livelihood.
Yeah, we've got the question.
Yeah, they do not have any opportunity
any of the
to access
microfinance guys like to take this question? First thing, I would like to respond to that, the first cut. This is not, this sector is not to provide all solutions for everybody. So with that caveat, please go ahead.
Yeah, so very quick from my side. The way we conduct our businesses, we normally would like to assess household debt. So it's always the husband and the wife. And that's purely to assess debt of both.
So what if it's a single person household?
So I'm going there. So for single, it's either the father or the brother, which normally adds as a co-borrower. And we use that to then assess the household debt. So we really don't distinguish with single women as not being allowed as borrowers. We do allow brothers and husbands to do that. The credit difference is actually not much. So we've tried to analyze that if your co-borrower is your husband versus your father versus your brother, is there a significant difference? There isn't much. So maybe folks who don't do it may want to reevaluate their reason of
is that a credit problem? Our experience shows it is not.
So I would also like to just comment on your one point that it's not that, yes, you're right, most of the MFIs as per credit policy lend to married women. The reason is not only credit is an issue. Issue is, especially in rural MFI, I'll tell you, normally the women get married and then they shift to other villages. So one other reason, big reason, especially for in our case, is this. Not that that the woman is not credit worthy. And I would like to supplement what he is saying. That is not only for unmarried, even for a widow. Now we have changed this policy recently, 1 year back, where we said, okay, if there is a widow, so who other than the husband, husband is not there, and or divorcee, who all other person in the family can be a guarantor.
Sure. We are moving away from high touch, high tech into something else.
So actually, I was going to bring high tech into this, right? So today, all of these limitations are there today because of the operating model of all of these companies, including ours, right? However, bringing as a technology guy, right? I mean, I have tech in my head all the time. See, all of you who have cell phones today, every one of us, you have no idea the level of tracking and profiling that these large companies are doing is beyond belief. It is beyond belief, right? You will not imagine. And how...
So thank you very much. You straight away stepped into the question I wanted to ask. I answered that. And what about data privacy and security?
So I will come to that. I will come to that. But to your point, those days are not very far away where the creditworthiness of that lady is going to be assessed by some analytics engine underneath based on a very deep, personalized, prolonged profile that is built on that lady, perhaps coming to his question, without her knowledge, which is what is being done today for all of you, us, I should say, right? So GDPR is, of course, a first step, and India, I'm happy, is taking, very aggressive steps towards that. But the implementation of that is going to be a real difficult task.
Deepak, my question is, how do you ensure that in the sense, a vulnerable customer doesn't get a very nice loan offer as I'm hovering near a booth shop?
No, so you will, in fact...
No, so what is it that we'd like to do as a customer protection framework? Is there something, apart from GDPR?
No, so...
GDPR is only about privacy. This is about actually using that data in order to entice somebody to take a loan.
Partly, because GDPR also allows for permission-based usage, right? So if you say, look, I give you no permissions, then people can't use your data, in which case they can't sell to you, right? I mean, this is what they call, the future of, profile-based capitalism, right? Anything that you get for free means you are the product. I mean, that's the standard line that all of us know, right? So there is absolutely no way for you to prevent exactly this. The world, all of them are moving towards this direction, right? If you happen to be by a booth shop or a toy shop or, some restaurant or whatever, and they happen to know that you like to buy, fancy glasses and you're walking next to some optics.
So Pawan,
they will sell you.
I'll tell you what I think about this, right? So there are three elements which we have to consider. One obviously is technology. Can technology answer this question of
because this entire informed consent is going to be a myth with vulnerable customers, right?
I don't know.
Because the credit officer will go and say, press this button.
No, which is the reason I'm about to say this, that today our disclosures and EONI are written by lawyers. What if it was written by a customer service executive? Would it change? The answer is yes. Is there a box where we can highlight saying, here are the three key elements that you need to know, everything else is junk, right? So I think those experiments will need to get done with people from low-income households and families and women specifically who don't understand, even I don't understand, you don't understand the signatures which we do on our documentation, or for that matter, acceptance and app on the phone.
Forget about documentation. Go to a restaurant, the guy pre-fills the feedback form and says, now you press the button here.
So I think that's the role of technology which can start coming in, and technology can be a huge enabler. The other is regulation as an enabler. Because I fear that if if the regulator takes a very strong view of this, we could land up in a situation where access is curtailed, innovation is curtailed, competition, high entry level barriers are introduced. So we could move towards exclusion, instead of inclusion. So I say guidance can come from the regulator, and which is what they've been trying to do till now, which is absolutely phenomenal stuff. But I think the third and the most important is the organization themselves, that what is their ethics and responsible frameworks in the organization. Can customer protection be a revenue driver for the organizations? Right?
That's an interesting
That's the key question, because if you are so good with your customers that none of your customers are scared of fraud or do anything else, would they come and do more kind of business with you? I think we've not explored this yet. Deepak wants to add something.
Not to create controversy here, though panel discussions are meant to do that, but I have a slightly different view. Unless a customer is willing to pay some money for the service that they're using,
I agree.
Right? Software is going to be available that will enable all sorts of things for free. The moment it is for free, I mean, all of us put our hands up, we'll take it, right? And the moment you take it for free, they have to make money somehow. So they're going to make money by profiling. And the profiling is, I mean, it is, again, I'll say it is insane the kind of and the level of data that people are collecting on you, even as we sit over here, right? They're listening, right? So each of our phones are listening to what we are saying. Right? So if you start talking about water heaters for the next 10 minutes with the person sitting next to you, guess what will happen when you go into Gmail? Yeah. You will start seeing advertisements for water heaters, right? And this is not just your cell phones. This is all the devices that are surrounding you, right? Whether it's your TV, your Alexas, and all of it, right?
I think on this depressing note, we should conclude before
I could go on and on because I'm paranoid about this.
I definitely like to work with people here and with Deepak and everybody else and Jana. Is there a model for revenue increases if you do good customer protection initiatives?
I mean, there are two angles to it. You're trying to find a market solution. I guess there are some others who are trying to find a regulatory solution.
No, because what Deepak is saying essentially is a market failure.
I know where you're coming from.
Right, because he's saying it's for free.
I know where you're
in
coming
fact,
from.
I'm saying the opposite, Pawan. I'm saying it is market success. Right? Because the market understands that we are all freeloaders, therefore they are able to sell us or give us something on which they make money.
Right.
Yeah,
so we have heard both the viewpoints. I think one person who was missing was Mr. Sharma. We would have wanted you here so that we can get your views on it, but we'll spare you because you're in the audience on the other side. I do remember having interviewed Dr. Urjit Patel in 2018 for my book. And at that time, I asked him what is the next agenda for financial inclusion. And Dr. Urjit Patel, with a straight, stony face, said, after Jandan, our agenda of financial inclusion is done, because whatever the state and the Reserve Bank had to do in terms of structural requirements, it's been done. My only sleepless night is going to be consumer protection from now on. And I think that was clairvoyant in one sense, and I hope you'll take Deepak's participation very seriously and also not be very nasty towards Pawan's this thing that regulation should not stifle innovation and market. I think it's time for food. Radhika, have we done good on time? Thank you very much. I think we can break here and continue the conversation as we go along. Thanks a lot. Thank you very much.
Thank you very much, sir. And thank you to the eminent panelists. Ladies and gentlemen, with that, let me now invite very quickly Shri Jay Kumar Gupta, Deputy General Manager, SIDBI, to come and do the honors for our esteemed panelists, starting, of course, with our moderator and Chair Professor M.S. Sriram, Visiting Faculty Public Policy and Chairperson, Center for Public Policy, IIM Bangalore. Let's have a huge round of applause for Professor Sriram, ladies and gentlemen. And sir, please present now to Dr. Pawan Bakshi, India Lead Financial Services for the Poor, Bill and Melinda Gates Foundation. Let's have a big round of applause, please, ladies and gentlemen. Please present to Shri Ajay Kamal, MD, Jana Small Finance Bank. Let's have a big round of applause, ladies and gentlemen. Final session. Let's get the energy out before we go for dinner. Shri Devesh Sachdev, Managing Director and Chief Executive Officer, Fusion Microfinance Limited, one of the upcoming MFIs in India. Shri Amit Arora, Senior Financial Inclusion Advisor, World Bank. Let's have a big round of applause. And Shri Deepak Amin, Promoter and Managing Director, Light Microfinance Private Limited. Once again, a big round of applause, ladies and gentlemen, for all our panelists, and a group photo opportunity. Sir, please stay for that. Give us a group photo opportunity. Ladies and gentlemen, before dinner, there's also something very important, which indeed is the valedictory remarks and vote of thanks. So I urge you to please stay for that and don't disperse or disband yet. Thank you once again. And ladies and gentlemen, today has indeed been a remarkable day wherein we had multiple honorary guests share their expertise, inputs and wisdom on micro enterprise finance, wherein they laid a roadmap, and I'd like to say a solid, firm roadmap towards a better tomorrow. I would now like to invite on stage, once my panelists disperse, of course. Thank you very much once again. Let's give them all a huge round of applause. Thank you. Thank you very much once again. And now, ladies and gentlemen, please help me welcome on stage Shri V. Satyavenkat Rao, Deputy Managing Director, SIDBI, to share his valedictory address to all our guests and attendees. Please help me welcome him with a huge round of applause.
Ladies and gentlemen, it has been a great event, beginning with thought-provoking insights and counsel from the dignitaries of the inaugural session, followed by 3 really engaging and stimulating panel discussions on topical themes. There has been much to learn from this packaged half-day event, and I'm going to debrief with the team with a few takeaways for us to develop our outlook for the future. SIDBI is proud of pioneering its role it has played in the development of microfinance movement in India for the last over 20 years, ranging from debt and equity support, term loans to MFIs, transformation loan to assist in transferring to from profit and scaling up the India Micro Equity Finance Fund for small MFIs, capacity development of 100+ MFIs, support to MFIs, small finance banks, ecosystem support programs such as convening the Lenders Forum, supporting code of conduct assessments, commissioning several research studies and policy documents, programs in financial literacy of women borrowers, to name a few. Coming to the panel discussions, as the views shared by the panel indicated, there are possibilities that open up on the next level evaluation of microfinance model post the new regulations which are eagerly awaited. SIDBI will continue to support the MFIs in their next phase 3 and will also contribute to ensuring responsible governance and operational practices by MFIs. The other issue that is being deliberated is the graduation of microfinance borrowers, both JLG and SHG members who have the potential to scale up their business and need larger enterprise loans. While the group model has served well for the microfinance delivery, it may not be an ideal model for larger loans for which group guarantee and peer pressure mechanism is also not appropriate. SIDBI is looking to support NGOs and MFIs to offer individual small business loan, and we believe that time is now right for microfinance providers to diversify and scale up these loans. The other big piece of the puzzle is, of course, the integration of digital technology into microfinance operations. And this is also going to be SIDBI's big priority to support digital innovation in microfinance delivery. Importantly, to stimulate fresh ideas, germination of innovative business models commensurate with changes in technology and adoption thereof by the sector, the launch of Sitharaman Challenge Fund by the Finance Minister today has been significant. As we conclude this wonderful evening, let me offer the vote of thanks. On behalf of SIDBI, I would like to place on record our gratitude to Honorable Union Finance Minister Srimati Nirmala Sitharaman ji for gracing us with her presence and for her enlightening inaugural address. I would like to express thanks to other dignitaries who joined us for the inaugural session and shared their wisdom and experience with us. We are grateful to the experts who joined us for the panel discussions, moderators and panelists for taking time to join us for their insightful deliberations. I take this opportunity to thank the partners of this edition of the Microfinance Congress for their support, FDCO for their continued steadfast support to SIDBI's initiatives and programs, Microfinance Institutions Network for coming on board as knowledge partner, and the media partner CNBC TV 18. Thanks to all of you who have actively participated in the event. It was a pleasure to have all of you with us. A special word to our Chairman and Managing Director, Sri Mr. S. Ramanan, for his leadership, guidance, and encouragement. A word of thanks to the event managers, Witchcraft, and the hotel administration and the staff. Last but not the least, thanks the MFIs, Satin Credit Care, Fusion Microfinance, Sacha Microcredit, Namra Finance, Swatantra Microfinance, and Light Microfinance, who have taken pains to arrange their beneficiaries as a part of this event. We did not tell them in advance, but the MFIs rose to the occasion. SIDBI is thankful to them. In the end, I congratulate my colleagues in SIDBI for organizing this successful event at such a short notice and thank them for their hard work and commitment. We look forward to hosting you all again next year for the 4th edition of the National Microfinance Congress. Meanwhile, we will of course continue to partner and work with all of you on various initiatives and programs. Please join us for dinner. Thank you.
Thank you very much, sir, once again for that wonderful valedictory and vote of thanks. And on behalf of SIDBI, ladies and gentlemen, it's my time now to sign off as well. This has been a momentous occasion with all of you being an integral part. And with that, thank you very much. Stay safe and take care, ladies and gentlemen, and do join us for dinner. Thank you.